The two materials I'm going to share. First one I've already shared in the group. These are the list of questions that we will try to target in today's class. All these are, big comprehensive problems where all the adjustments are included. And second material I will share at the end of the class where, I took that material from internet. There are some top 50 questions, something like 50 questions. All are comprehensive questions. So that will help you for practice of questions. From those 50 and RTP, MTP only, I choose some 10 to 12 questions to be discussed in class. So I hope you received the material in group.
Yes, sir. Received.
Yeah, sure. Can you please call Marvin? Their foundation class going on, huh? Who's the faculty there? Any of them writing both groups? You're writing both groups, right? So how's the preparations? Going well, right? I want this PDF to be opened here that I've shared. Whether we can bring it through mail or WhatsApp. Yeah. So online students, you all can, open the questions list and just go through like what are the types of questions are there, just to have an overview. Only for one or two questions I've posted the answers also because those are very lengthy for us to solve and repetitive questions. So predominantly I have covered ratio analysis because ratio analysis, learning the formulas is not important, but how to approach the problem, that is what is important. So predominantly ratios I have covered, and then capital budgeting I have covered because capital budgeting we have to understand how we should solve the problem. So ratios we have covered, capital budgeting and cost of capital. Cost of capital, one or two problems, with good problems with some new points that I have covered. And then, yeah, working capital management, one or two questions I have covered. Dividend decisions I have not covered because dividend decisions is completely formula. You know the formula, plug in values, get the answers. Remember all the formulas dividend, right? Cool. Wow. Just, by the time he brings the material, just for revision, what is Walter's formula? I mean, what is Walter's model formula? D plus okay, R by K into E minus D divided by K. Very good. I think you saw the whole video, huh? Now only you saw that. Luckily, I asked this question only. So online and offline students both, whatever problems I'm solving, you also solve with me, okay? But don't be very slow. Be little fast and little quick, okay? They received a material, just write the chapter name with each question so you can identify. Whether are you able to identify which question is from which chapter, just try that. Okay. So, okay. Even online students, I also want an answer from you. So, first question, if you see which chapter it is from, ratios, huh? Okay. Yes. Second question, ratios, very good. Third question is from which chapter? Third question is from investment decisions, huh? Cost of capital, okay. Third question is from cost of capital. Fourth question. So fourth is actually from cost of capital, okay. Fifth one is cost of capital. Sir, why so many questions of cost of capital? We are very strong, that is what you are telling, huh? We'll see. Question number 6, capital structure decisions, okay. 7, so yeah, so this is capital structure. You are able to identify it, online students, at least by reading the question, are you all able to identify which chapter it is from? First level test.
Yes.
Okay, very good. Question number 8, investment decisions. Okay. Question number 9, again investment decisions. Question number 10, investment decisions. So question number 11, which chapter it is? It's working capital management. And question number 12. Okay. Again, working capital management. Okay. So if you would have seen risk analysis in capital budgeting, I have not covered. Why? It is very simple, multiplication. Okay. And what I have not covered, dividend decisions I have not covered, because we cannot add any value in this classroom. If you know the formula, you will be able to solve. Okay. So only this much questions are there. Okay. Which chapter will start with? Tell me your favorite chapter. Which chapter? In the order you want to go? Ratios in the order? Okay. Online students, reverse order. Why? You want the toughest questions first and then slow by slow. Okay, okay, fine. So since you all are asking, I'll just pick up the toughest question here. Okay, I'll just pick up the toughest question. See, nothing is tough unless you know. Once you know, it will become easier. Okay, but if you don't know, then this will be tough for you. Let me just take this question, because you all are having fresh minds now, so you'll be able to solve it. Let's do. See, let's start with investment decisions only. Okay, investment decisions, chapter wise we'll go, so that we'll go step by step. Okay, let's start. Take question number, this question number 8. Okay, take question number 8. So question number 8 is an RTP question which came in May 2020. Whatever we discussed in yesterday's class, all this you'll be revising once we are doing all the questions. Okay, so let us read the question. I always say reading the question is more important than solving the question. Okay, let us read the question. And while writing question, see, solving the question is not today's agenda. Today's agenda is, while solving question, how to approach a problem. That is what is today's agenda. If you know how to approach a problem, any similar question comes in the exam, you will be able to handle it. Okay, it is not necessary that the same question will come in the exam. Even some adjustments here or there, some numbers here or then is possible. Okay, let us read the question. Company is considering the proposal of taking up a new project which requires an investment of 800 lakhs. So what is 800 lakhs? It is initial cash outflow. Okay, initial cash outflow. Okay, while reading alone, you have to identify what numbers where you should put. Okay, on machinery and other goods. The project is expected to yield the following earnings. Okay, it is earnings before depreciation and taxes. Okay, earnings, so PBT, earnings profit before depreciation and taxes. So it is something EBIT. Okay, earnings before depreciation and taxes. So these are earnings. So what you want to do, you want to identify the cash flow from this earnings. Okay, you want to identify the cash flow from this earnings. The cost of raising the additional capital is 12%. So this 800 lakh, the cost of raising additional capital is 12%, and assets have to be depreciated at 20%. Okay, so to calculate depreciation, 20% is the depreciation rate on WDV basis. The scrap value at the end of 5 years may be taken as 0. So what is the scrap value? The scrap value is 0. So nothing you will recover. Income tax applicable is 40%. Okay, what is the income tax applicable? It is 40%. This question number 8, right? Yeah. 1 minute. So as I told you, whenever you solve a problem, what is the first step? Initial cash outlay. Okay, initial cash outlay. Initial cash outlay is nothing but year 0. So what is the initial cash outlay? It is the cost of the machinery, 800 lakhs. Just one moment. This is May 20 RTP. Okay, let's start. So what we want to calculate, net present value and then IRR. So this is the first type of problem which says what I said in capital budgeting, only two types of problems are possible. What is the first type of problem? First type of problem is details will be given and they will ask you the techniques of capital budgeting. Second is the case study based problem. So this is problem type number 1. Okay, let us try to solve this. Yes. Question number 8. Okay, always put step 1 or you can put working note 1 or anything. Step 1, it is initial cash outlay. Year 0. What is initial cash outlay? Cost of machinery. It is 800. So rupees in lakhs. 800. Outflow or inflow? Outflow. Okay. Now working note number 2 will be annual cash flows. Annual cash flows. You have to put year as 1, 2, 3, 4 and 5. Okay. What is this? Profit. Okay. Profit before depreciation and taxes. Okay. So profit before depreciation and taxes. So the numbers are 320, 320, 360, 360, 300. So now you got profit before depreciation and taxes. So what you have to do after depreciation? So reduce depreciation. Reduce depreciation. Depreciation you don't know. So you have to make a working note. So just make working note number 3 for depreciation. Always come down. Come down. Working note number 3, depreciation schedule. Okay, depreciation schedule. Depreciation is WDV, correct? So opening WDV, depreciation, closing WDV. Okay, so year 1, 2, 3, 4 and 5. 1, what will be the opening WDV? 800 lakhs. What is the depreciation percentage? 20%. So 800 into 20, 160. So my closing WDV will become 640. This 640 is my opening WDV. 640 into 20%, 128. So 128 and 640, your closing WDV is 512. 512 into 20%, 102.40. Okay, then this will become 409.6. So 409.6 into 20%, it will become 81.92.
Excuse me, sir.
Yes.
Sir, the 102.4 round பண்ணி போடக்கூடாது. போட வேண்டாமா?
2 digits வரைக்கும் நம்ம எடுக்கலாம் because amount is already in lakhs, right? Amount is already in lakhs.
Okay, thank you.
Okay, so 409.6 See, I want you also to solve. Okay, online students, just don't see, you also solve. 327.68. 327.68 into 20 percentage, you will get 65.54. So your closing WDV is 262.14. Okay, this is your closing WDV, and you got all the depreciation values. Okay, you got all the depreciation values and also the closing WDV. One 128, 102.4, 81.92. So let's put all those values. 160, 128. Okay, depreciation 160, 128. Third one 102.4, 102.4, 81.92, and 65.54. 61.54. So profit before depreciation. So you will get profit before taxes. Okay, so 320 minus 160, please quickly tell me the number, so you know I don't have to spend some time. What is 320 minus 160? 160. 320 minus 128, 192. 360 minus this 102.4, how much? 257.6. 360 minus 81.92, 278.08. Fifth one, 300 minus 65.54, 46. Okay, you all are with me, right? So profit before taxes. Now less taxes. Less taxes. How much percentage taxes? 40 percentage is the taxes. Okay, so 160, so 40 percentage, so 0.4. Okay, into 160, 64, 192. You will get 76.8. 257.6, you will get 103.04. 278.08, you will get 111.23. and 234.46, you will get 93.78. So this is profit after taxes. So profit after taxes 160 minus 64, I have a feeling we are going very slow. 115.2, 257.6 minus 103.04, 154.56, 278.08 minus 111.23, you will get 166.85. Then 234.46 minus 93.78, you will get 140.68. Okay, 140.68. Online students, are you all doing with me, right? See, it is very easy for me to take the answers and directly put tick mark and solve, but why I'm solving is that you also want to solve and I will also solve with you. Okay, so now you got the PAT. But what you want is the cash flow. So what you have to do now? What's the next step? Add back depreciation. So you have to add back depreciation. In the question, no other thing is given, right? Yeah, no other thing is given. So add back depreciation. Let's add back all the depreciation. 160, 128, 102.4, 81.92 and 65.54. Please tell me what are the cash flows. 256, 243.2, 256.96, 248.77, 206.21. Okay, 206.21. Clear? So these are the annual cash flows. Okay, these are the annual cash flows. Now, what is one thing that you have to note in the question? What should be the discounting rate? You have to find the NPV, correct? So what should be the discounting rate of NPV? Why 12%? because it is given cost of raising additional capital is 12%. Okay, so the significance of this 12% is that this is the discounting rate. This is the discounting rate that we have to use. Now people will ask, why discounting? Discounting rate directly should be given. Why it is cost of raising additional capital? I already told you, whenever we are solving any capital budgeting problem, the discounting rate is nothing but marginal cost of capital. Remember, right? Discounting rate is the marginal cost of capital. So here the marginal cost of capital is 12%. So we have to discount using 12% rate. Before that, let's go terminal cash flows. Okay, working note number 4, terminal cash flows. Working note number 4, terminal cash flows. Now, terminal cash flows, first thing would be scrap value. What is scrap value? Yes,
One small doubt, sir.
yes.
Machinery வந்து after 5 years scrap value 0 அப்படிங்கிறப்ப ஸோ இப்போ நம்ம 50 year வந்து ஃபுல் அமௌண்ட்டையும் லாஸ் எடுத்துக்கல.
Yeah. அதுதான் நான் terminal cash flow பண்ண போறேன் year 5.
ஓகே சார், தேங்க்யூ.
Okay, so scrap value is 0. Okay, scrap value is 0. Now if I already told you what is the book value. Book value is 262.14. What is the scrap value? Scrap value is 0. So is it a capital gain or capital loss? Capital loss. Now in capital loss, what will happen? Tax benefit or tax expense? Opportunity benefit will get. So tax benefit, okay, tax benefit on scrap value. So what is the tax benefit on scrap value? 262.14 into 40%. It is 105.65. Okay, 105.65. In the question, I think 1 minute. In the question, the tax is not taken. 1 minute. One minute. Huh? Two not 6.21. Yes.
So the 40% வந்து 104.8. 262.14 into 40%
Is 104.
86.
Okay. What, ma? Why are you doing mistakes? Huh? This is 104.86. Okay. Done. Yeah, clear. Everything is clear now. Yeah, 262.14. What is the book value? 262.14. Avoid silly mistakes. Okay. Okay. Everyone, are you all able to follow now? You know, many people make mistake. I will also tell you what are the mistake areas that you have to. Many people make mistake here. Okay, many people make mistake here. They tend to forget this, and then their question goes for a toss. Why? Because they think scrap value is not given, so tax benefit will also be not there. So scrap value should be 0 because it is directly given. Scrap value is 0. Okay, so till here. Now next one, what is computation of NPV? Okay, computation of NPV. Computation of NPV year 0, 1, 2, 3, 4 and 5. So first one, what we should do? First one, initial cash flow. Okay, what is initial cash flow? 800. Okay, initial cash flow is 800. Second one, annual cash flows. Okay, annual cash flows, just tell me the amounts. Yeah, 256,
243.20,
243.20,
256.96,
256.96,
248.77,
248.77,
206.22,
206.22. Okay,
criminal.
yeah. Now what is third one is the terminal cash flows. Now what is the terminal cash flow fifth year? 104.86. So once you total all these are the total cash flows. Okay, these are the total cash flows. Zeroth year will be 800, 256, 243.30, 256.96, 248.77, and this will be I think 311.08, right? 311.08. Clear? Now present value factor at the rate, how much percentage? 12 percentage, already given in the question. Okay, don't put in calculator, already 2 digits given in the question, so you have to take it from the question only. So it is 0.89, it is 0.80, 0.71, 0.64 and 0.57. You will get discounted cash flow. Okay, you will get discounted cash flow. So discounted cash flow 800. Okay, bear my handwriting, you should not do similar to this, you should do it neatly, beautifully. Okay, present it beautifully. So what is the discounted cash flow? $256 into 0.89.
227.84.
Okay, 227.84, then 194.56, then 182.44, 159.21, 311.08 into 0.57, you will get 177.32. Okay, 177.32 or 31. Okay, 177.32. Now what is the net present value? NPV is equal to total of all this. Okay, NPV is equal to total of all this. It will become 141 point 141.37. Everyone. So what is something new that we discussed? Okay, what is something new that we discussed? First is cost of capital, sorry, discounting rate, what we should take. Second thing is this tax adjustment is the mistake area. Tax benefit on scrap value, many people miss to take it. So I have solved one problem so that you will be aware how to solve a simple problem. I call this as a simple problem. Okay, comfortable? Comfortable? Are you all getting this answer right? Okay, ba. Now see year cash flow, you know. Okay, year cash flow 0, 1, 2, 3, 4 and 5. Okay, 0, 1, 2, 4 and 5. This is 800. This is the approach that you should follow. Second is computation of IRR. Okay, computation of IRR. So NPV, that is the approach. IRR, I already told you this should be the approach. Year and cash flow. So 0, 800, you know all the cash flows. Okay, you know all the cash flows. So this will be 220, sorry, total cash flows you have to put. So 256, 256, 243.30, 256.96, 256.96. This will be 248.77, 248.77, and fifth one will be 311.08, 311.08. Clear? Now what next we should do? Now see the question. You have to take IRR. So you want 2 guess rates. What are the 2 guess rates that you will take? I already what you said?
14.
Why 12? Why 14? I already told in yesterday's class, whenever tables and different guess rates are given, always take the last second value first. Always take the last second value first. If this is positive, okay, if this is positive, then definitely 20 will be negative. If this is negative, then definitely 40 will be positive. Okay, so always take. Okay, this is one trick. Otherwise, why they have given this much rate? Because they want student to make 14 also. 12, you know it is positive, so 10 no one will do. If you are doing 10 now, you have to Okay, so 12, afterwards you have to do 14, then you will do 16, then you will do 20. So they want student to calculate 4 times. That is the reason so many rates are given. So what you should do, you should become intelligent. Always take the middle value first. Now what is the middle value? 16 is the middle value, last second value. Yeah, you tried 16, what it came? Positive. Then 20 will be negative. Okay, 20 will be negative. Okay, so always, okay, don't fall in this trap. Otherwise what will happen? 12 already did, it is positive. Let's take the next guess rate, you will go for 14. 14 is again positive, next guess rate you will take 16. 16 is again positive, then 20 will become negative. Okay, your 5 minutes got wasted. So even 1 minute is precious in examination. So what you should do, first always take 16. If 16 is positive, then take 20, then 40 will become irrelevant for you. Okay, 10 is already irrelevant, 12 you have used it. Clear? So present value factor at how much percentage? 12 percentage, 16 percentage. Okay, present value factors at 16 percentage, then discounted cash flow, then present value factor. First you calculate this. Okay, present value factor 16 percentage will become 1. Okay, 1, 0.86 already given in the question. Okay, 0.74, 0.64, 0.55, 0.48. Then multiply cash flow into discounted cash flow. So this will become 800. Then this will become 220.16. This will become 179.97, 164.45, 136.82, and then 149.11.08 into 0.48, 0.32. Okay, 0.32. Once you do that, you will get the total discounted cash flow. Okay, you will get the NPV. You will get the NPV. So what is the NPV here? 140, sorry, not 140, 50.72, correct? 6, 7, 13, 18, 20, yeah, 50.72. Online students, are you all with me?
Yes, sir.
Yes, sir.
Others, are you all doing problem with me? Others?
Yes.
Okay,
Sir.
great. Okay, so here are you all comfortable, right? Comfortable? Okay, pa. Now if you know NPV is positive, then what you have to do? You have to increase the rates, correct? If NPV was negative, you would have decreased the rate. Clear? But here NPV is positive, so now what is the next rate? 18 percentage, 20 percentage. Okay, 20%. Don't take 18% because 20% is already given in the question. So take 20 percentage. Then discounted cash flow, 20 percentage, it will become 1. Okay, 0.83, 0.69, 0.58, 0.48, and 0.40. Only 2 things will be. Then 800, this will become 212.48, 167.81, 149.03, 119.41, 124.43. Once you total this, 311.08 into 0.4 is 0.43. So once you total this, what you will get? 26.84. Okay, 26. Okay, rounding off. Okay, 26.84. 8, 9, 12. Okay, 8 plus 1, 9 plus 3, 12, 13, 6. Okay, it is 86. Okay, 26.86.
Sir, 8-4 தான்
8-4 தான் வருதா?
8, 9, 12, 16 வந்து பாருங்க.
Yeah, okay, it is 8-4, sorry. 26.84 minus, okay, yeah. So 26.84. So once you have a positive NPV, once you have a negative NPV, once you have a lower rate, once you have a higher rate, you can be able to find out the IRR. So what is IRR? What is IRR? lower rate plus NPV at lower rate divided by NPV at lower rate minus NPV at higher rate into higher rate minus lower rate. What is lower rate, pa? 16% plus what is the NPV at lower rate? 50.72. What is NPV at lower rate? 50.72 minus of minus 26.84. Okay, minus of minus 26.84 into, okay, into 20% minus 16%. Clear? So once you do that, what is the IRR that you guys are getting? What is the IRR that you guys are getting?
$18.60.
18.62%. Very good, very good. Why it took 12 and 20? Did you compute at 16? If you compute at 16, why you took lower rate 12? I already said you always take the closer value. You will get answer, okay? You will get answer, but more accurate will be more closer answer, okay? So once you know the closer, take the closer na. Why complicating it? Okay, completed. I think we are going a bit slow, pa. Let us speed up. Okay, completed. Question number 5. See, this is the simple problem in capital budgeting, but still many people struggle to do that. Only while solving the problem, we'll understand all the intricacies that we will face. Okay, question number 5 completed. Now let's go to question number 6. Question number 6, I don't want to do it because this is similar to question number 8, but it is clubbed with sensitivity analysis. Okay, so this is investment decisions and risk analysis in capital budgeting. Okay, if you read the question, AR has undertaken a project, initial investment of 2000 lakhs and 800 for working capital. Okay, so it will be 2800, okay, for working capital. Plant and machinery will have a salvage value, so it is having a salvage value of 474.61, okay, at the end of 5th year. So this is initial value and this is terminal value, and depreciation is 25% on WDV method. Other details, you are having sales, selling price, variable cost. So selling price minus variable cost, you will get contribution. Contribution minus fixed cost, okay, minus fixed cost, you will get the profit. You will get the profit. Then you add back depreciation, you will get the cash flows. So this is how you have to do. Rate of interest on bank loan. What is rate of interest on bank loan? Discounting rate, okay, the rate of interest in bank loan, this alone you have to take it as discounting rate. After tax required rate of return is 15%. Now what is the discounting rate? 12% or 15%? This is what the issue is. Answer. Online students, will you able to answer? Cash flow will be after tax.
Sensitivity analysis also.
Yeah, we have sensitivity analysis also, but my question is, what should be the discounting factor? What should be the discounting rate? If at all you want to find the NPV, what should be the discounting rate? 12% or 15%? Imagine this is example, you will get confused. 15%. Why, sir, 15%? You'll ask a question, right? Why 15%? See, this is the rate of interest. See, this is not additional financing that they have done. Has undertaken a project which has an initial investment of 2 lakh and everything is given. After tax required rate of return. Okay, what is the rate of return that I want is what is NPV. Okay, what is the rate that I want? KE. Clear? KE. It is nothing but KE. After tax required rate of return 15%. Rate of interest on bank loan is KD. Okay, rate of interest on bank loan is KD. Actually, KO should be the discounting rate. We are taking KE. We don't know the, we cannot find weighted average cost of capital here. So what is the discounting rate? 15%. Clear? This is one issue that is there in this problem. Clear? Now see, everything else is given. Selling price minus variable cost will be 250. 250 into 10 lakh, you will get the contribution. Contribution minus fixed overheads. So fixed overheads is 300 lakhs. Then minus the depreciation you have to do. Then you have to minus taxes. Then you add back depreciation. You will get cash flows. Okay, you will get cash flows. Similarly, I don't want to do. So see, first this is the sales volume. This is the contribution per unit. This is the contribution. Okay, 2500. Less fixed overheads 300, 300, 300, 300. So this will be profit before depreciation and taxes. Then less depreciation. Depreciation, always do a depreciation schedule. So this is the depreciation schedule. Opening WDV, depreciation, closing WDV. Okay. So you got the closing WDV as 474.61. Now note here, your closing WDV is also 474.61 and scrap value is also 474.61. So whether there is any capital gain or loss, no capital gain, no loss. So here you should not make any tax adjustments. Okay, here you should not make any tax adjustments. Okay, in terminal value is 474.61 and also the WDV is also 474.61. So there will be no tax adjustments. Clear? Okay, so terminal cash flow will be there, tax adjustment will not be there. Okay. So less depreciation, do less depreciation, you will get profit before taxes. Then you do less taxes, you will get profit after taxes. Add back the depreciation. Okay, add back the depreciation, you will get the cash flows. Okay, you will get the cash flows. Then third step, terminal value. What is terminal value? Terminal value is 474.61, which is the scrap value plus working capital. Okay, do not forget under initial also you should minus working capital. Okay, under initial also you should minus working capital. What was the cost of machinery? 2000. Okay, initial is 2800. So 2800 is initial capital. This 800 rupees you will recover back. Then you will get the net cash flows. Okay, you will get the net cash flows. Then you have to reduce the 2800. 2800, you will get the NPV as 3009.62. Why I am not doing this problem? Because this is very simple. Only 1 or 2 points that I wanted to discuss. I am just discussing it here. Okay. Yeah, it is an investment, right? Working capital is an investment. So it will reduce. Your initial cash outflow will be minus 2800. Your annual cash flows will be this, till add back depreciation. This will be your annual cash flows. You do in my approach. Okay, you will not get confused. Study material, you know, every time. So do in my approach. Till here you have to do cash flows. Then terminal value, what you have to do? Add back these two values, salvage value and working capital. This is the terminal cash flow. Clear? Once you do that, then you do the NPV schedule, initial, annual cash flows, then terminal cash flows. You will get all the cash flows. Use present value factor at the rate 15%. Okay, not 12%, 15%. You will get the net present value. Net present value is what? 3009.62. Online students, clear? I am not solving this problem. Why I am not solving this problem? Because this is similar to last problem. But 1 or 2 points that I wanted to discuss here. Clear? Clear? Okay. Okay. Now see here, one more requirement is there. Also determine sensitivity analysis. Okay, also determine sensitivity. 2 factors they are given. One is decrease in selling price. If selling price is decreased in 10%, what will be the new NPV? Nothing. Selling price, what was the selling price? Selling price is 500. So selling price decreased by 10%, what will be a new selling price? 450. So just create the same table. Instead of selling price alone, you put 450 rupees. Okay, then find the new net present value. Find out the new net present value. See, selling price decreased by 10%, which means this 450, this 500 is becoming 450. All other things same, find out the net present value. It is 1920.88. Then what is the percentage change? Here the percentage change is 36.18%. Clear? Now what is the second factor here? What is the second factor? Increase in cost of plant and machinery by 10%. Increase in cost and plant and cost machinery. So what is this? Initial cash outflow. Correct? So cost of machinery is increased, which means 2000 is becoming what? 2200. So what you have to do? You have to take 2200. Is there anything else you are missing here? Now depreciation will also change, right? Correct? Depreciation will change. So what you have to do? You just have to again put, okay, you just have to again put this 10% reduction in price is okay. you just have to again put this depreciation. Okay, if you are putting this depreciation, your profits will change. Okay, if you are putting this depreciation, now your profits will change, now your cash flows will also change. Your profits will change, your cash flows will change, then you will get the net present value is 2848.18. Okay, clear? Tax adjustment is not made. Okay, tax adjustment is not made. They have assumed there is no tax. Actually, tax adjustment should also come, because what is salvage value? 476.61. What is WDV? 522. So there is a capital loss, so there should be tax benefit. Okay, there should be tax benefit of 522.07 minus 474.61. So tax benefit should be there on 47.46. What is the tax percentage? Is 35%. So 16.61 should also be added in 5th year. Okay, 16 point, but in the RTP they have not added. Okay, they have ignored this tax. Usually you can take two assumptions. One, the tax on scrap value is not there, tax on scrap value is there. Usually in the question it will be given. Okay, you have to take tax adjustment on scrap value. Usually in the question it will be given. If it is not given, that is the reason they took an assumption that there is no tax impact on scrap value. So that's the reason they didn't take any tax impact on scrap value. Clear? If you want to take tax adjustment, and in the 5th year you will add 16.61. Why 16.61? Because it is a tax benefit. Clear? Outflow or inflow? 16.61 inflow. Why tax benefit? Because your WDV is more and your salvage value is less, so there is a capital loss. If there is a capital loss, you will get tax benefit. Clear? Online students, are you all with me on this?
Yes, sir. Yes, sir.
Okay, very good. Clear. Now, yes,
Sir, அந்த tax value எவ்வளோ எப்படி சொல்லுங்க?
this 16.61. Okay, see, yeah, see the sale value, the salvage value is 474.61. What is the WDV? The WDV is C 522.07. This is the WDV.
Okay, okay.
Okay, so 522.07. So there is a capital loss. This is the salvage value and this is the WDV.
Okay, sir, now what?
Okay, so on that capital loss you have to do into 35%, you will get the tax benefit. Clear?
Please, sir.
Okay, see, only in, yeah, selling price is reduced. Yeah, variable, 1 minute pa. Variable cost is 50% of selling price. No, this should not be adjusted, because variable cost is not changed. Under sensitivity analysis, only one factor will be changed, all other factors should be remaining same. Okay, all other factors should be remaining same. Even though it is given 50% of the selling price, don't do 50% of 450. Okay, variable cost is remaining same, selling price is only reduced. What is the cost? If I'm selling at 10 rupees, I'm making at 8 rupees. So if my selling price is reduced, doesn't mean that my variable cost is also reducing. Okay, it is just the selling price is reduced, variable cost is remaining the same. Okay, don't do this mistake also. No. This is wrong. Under sensitivity analysis, it is clearly given one factor changes, other factors remain constant. Okay, other factors remain constant. So this is one more point. Very good point actually. This is one more point that you should not make any mistake. See, how can you say selling price is reduced? How can you say cost is reducing? Logically, you cannot tell, right? If volume is reducing, then you can say your value, this will reduce. So where were we? We were in question number 9. So question number 9, first you have to calculate NPV, then you have to do sensitivity analysis. One factor should be common, second factor should not be changed. So here variable cost should not be changed, even though in the question it is given selling price is equal to 50% of variable cost. Okay, variable cost should be changed, should not be changed. Okay, so are you having comfortable? Say 2 problems we solved. I think 10, 15, 1 hour, 2 problems we solved. Comfortable? Okay, pa. Now let's do question number 10 pa. let's do question number 10. Question number 10 is an amazing problem. A similar problem is there in study material, but here 2-3 more adjustments are there. Okay, all the possible adjustments are there in this question. This is a November 2020 RTP question. This question will not come in examination because it is having all the adjustments, but 1 or 2 or 3 adjustments will come in the questions. Okay, if you see this question, it's a very big question and all the adjustments are there in this question. So once we solve this question, you will have complete hold over this chapter. So with this, we will complete this investment decision chapter. Okay, this with question number 10. Okay, so can we start reading the question? Okay, online students, are you all with me now? Are you all with me?
Yes, sir.
Okay,
Yes, sir.
very good. Okay, let's start. Large profit making companies considering installation of machine to process the waste produced by one of its existing manufacturing to be converted into a marketable product. At present, the waste is removed by a contractor. See, at present, right now they want to have some machinery so that they want to process the waste. Okay, they want to process the waste. At present, the waste is removed by a contractor for disposal on payment by company of 150 lakh rupees per annum for the next 4 years. So what is happening right now? They are having a contractor. To that contractor, they have to pay 150 lakh. So 1.5 crore rupees for the next 4 years they have to pay, and they have entered into a contract. They have entered into a contract with that contractor. For the next 4 years, they will pay 1.5 crore rupees. The contractor will come to my premises. He will take the waste and he will go away. Okay. But now what we are doing, we don't want that contractor. We want to buy a machinery. That machinery we will process that waste. Okay. This is what is the question. The contract can be terminated upon installation of the aforesaid machine. So what is happening? This contract can be terminated, but we have to pay a compensation of 90 lakh rupees. We have to pay a compensation of 90 lakh rupees before the processing operation starts. So this 90 lakh rupees, okay, this 90 lakh rupees, is it relevant or irrelevant? First thing, it is irrelevant. Why irrelevant? When you purchase the machinery, you will terminate the contract. When you terminate the contract, you have to pay 90 lakh rupees. So this becomes relevant, right? This is paid to the contractor. What I am telling contractor, see, 4 years we entered into an agreement, but now I am purchasing a machinery. So 4 years contract has been cancelled. So what is telling? How can you cancel 4 years? Pay me a penalty. So he is paying 90 lakh rupees as a compensation. Okay, payment of compensation. So we have to pay to the contractor 90 lakh rupees. So when we are paying 90 lakh rupees, we will be saving this 150 rupees, correct? This is an opportunity benefit. This is the cost saved, correct? This is the cost saved. 150 lakh rupees per annum is the cost saved. Are you all understanding? 150 lakh per annum is the cost saved. Saved cost is an opportunity benefit. Saved cost is an opportunity benefit. Clear? Everyone? Okay, pa. Now, this one 90 lakh we have to pay before processing operation starts. So this is initial cash outlay. Correct? This is initial cash flow. Clear? Okay. This compensation is not allowed as deduction for tax purposes. So you should not do any tax adjustment on this compensation. It is year 0 only. Okay. The machine required for carrying out operation will cost 600 lakhs. So when you read this, what you will say? 600 lakhs is initial cash flow. Clear? You will say initial cash flow, but it to be financed by a loan repayable in 4 equal installments commencing from end of year 1. So this 600 lakhs is an outflow, but 600 lakh I don't have to pay in 0th year. I will pay 150, 150, 150, 150 in 4 equal installments in 4 years. So my cash outflow is not in the 0th year. My cash outflow is in 4 equal installments. Online students, are you all with me on this? Interesting question. Are you all with me on this? It is nothing but 600 divided by 4. Okay. 600 divided by 4 is equal to 150 lakh. This 150 lakh, 600 should be my outflow. But this 600 is not happening in 0th year. This 600 is amortized. It is not amortized. We are paying by installments. So 150, 150, 150, 150. 4 years we are paying. So my cash outflow is 150 lakhs in next 4 years. Clear? So 0th year only one thing is there, which is 90. Okay. The interest rate is 14% per annum. For this financing we are taking, we have to pay interest also. What is the interest? Interest is 14% per annum. At the end of 4th year, the machine can be sold for 60 lakh rupees. Okay, so this is terminal cash flow. This is terminal cash flow. Why? Because this is a scrap value. It can be sold for 60 lakh rupees. And cost of dismantling is 40 lakhs. So this is also terminal cash flow. This is also terminal cash flow. Clear? Reading the question is what is important. When we read the question, you have to understand the numbers. You have to understand the numbers, where these numbers will come. Okay. This is question number 10, right? Yeah. Yeah. This is question number 10. Okay. Now, sales, material consumption. Now we have sales, material consumption, wages, other expenses, factory overheads, and depreciation. If you see here, it is depreciation as per income tax rule. Okay. Here it is depreciation as per income tax rule. Now you all will ask a question. Sir, usually we used to calculate the depreciation, correct? If 600 rupees is my cost, they will give either it is SLM or WDV, and we used to calculate under SLM or WDV method. But here they have given income tax method. So what we should use? Is this a question? What we should use? Depreciation as per income tax rule we should use or not use? In what depreciation tax will be calculated? Depreciation as per income tax or depreciation with books? Depreciation as per income tax. So if directly they have given depreciation as per income tax, always use depreciation as per income tax. Okay, don't break your head and calculate depreciation. Anyhow, no depreciation details, WDV, SLM, it's not given, but depreciation as per income tax is given. So directly reduce depreciation as per income tax rules, then find out the profit after tax, then add back depreciation. Clear? So how to find out profit before taxes? Sales minus material consumption minus wages minus other expenses minus factory overheads is, okay, minus depreciation is profit before taxes, then minus taxes, profit after taxes, add back depreciation, you will get the cash flow. Okay, now adjustments. This is what is very important. Okay, now see, read this. Initial stock of materials required. Okay, initial stock of materials required before commencement of processing operation is 60 lakh. What is happening? 0th year I want some material. So what they are talking? They are talking about working capital, correct? What is working capital? Working capital is current asset minus current asset. Inventory is one current asset, correct? So before starting the operation, 60 lakh rupees I want as working capital, correct? So this is nothing but working capital. Okay, this is nothing but working capital. So 0th year, okay, at the start of 1 year, which means 0th year, I want 60 lakh rupees as working capital. Clear? So initial cash outlay 60 lakh rupees. Clear? Working capital. The stock levels of material should be maintained. Now what they are telling, at the end of year 1, 2 and 3, I want my material level to be 165 lakhs. I want my material level to be 165 lakhs. And the stock as at the end of the year 4 will be nil, because at the end of the machinery your stock will become nil, because you have recovered all the working capital. Okay, you have recovered all the working capital amount. We will see how we have to handle this. Okay, but first you understood that this is a working capital adjustment. When you read the question, you have to understand this is a working capital adjustment. Next, storage of material. Storage of material will utilize space which would otherwise have been rented out for 30 lakh rupees per annum. See, read this properly. I am buying some material that I am storing it. Okay, had I not stored that, I would have got some rent of 30 lakh rupees. Clear? I would have got some rent of 30 lakh rupees. So this 30 lakh rupees is an opportunity. Cost or benefit? Cost. Okay, profit foregone is a opportunity cost, correct? Profit foregone is opportunity cost. You have to understand like this. I am having some space. Now because of this project, what I am doing, I am utilizing this space. If this project was not accepted, in this space I was getting some rent of 30 lakh rupees. But now I will not get that rent. So this is my cost, correct? This is my cost. Understanding? So 30 lakh rupees is the opportunity cost. Online students, are you all with me till here? Once we understand this problem, then we'll do the problem quickly. Online students with me?
It's a
Okay, okay. Now this one. Labor cost includes wages of 40 workers whose transfer to this process will reduce idle time payments. So what is happening, what they are telling is, this labor cost 225, 225, 225, 300, it includes some labor payments, okay, it includes some labor time employees which are 45 lakhs in year 1 and 30 lakhs in year 2. Idle labor, is it a relevant cost or irrelevant cost? Irrelevant cost, correct? Why irrelevant cost? Because whether I'm accepting the project or I'm rejecting the project, anyhow I am going to pay these idle payments of 45 lakh and 30 lakh. So just because I'm accepting this project, I cannot take this 45 and 30 as incremental cash flows. So these two are irrelevant costs. These two are irrelevant cost. Why? Idle labor are irrelevant cost. Why? Because this is not relevant to my profit. So I have to reduce this from wages, correct? From wages 225 I have to reduce minus 45. From here I have to reduce minus 30 lakhs, okay, minus 30 lakhs. Clear? Now second, factory overheads includes apportionment of general factory overheads. So I already said you allocated overheads is an irrelevant cost, correct? So what they are telling, factory overheads are allocated overheads. So factory overhead is irrelevant or irrelevant? Factory overhead is irrelevant, but here the point is, except to the extent of insurance charges of 90 lakh rupees per annum. So in this factory overhead, we have something called as 90 lakh rupees. Okay, 90 lakh. So out of this 90 lakh is relevant, all others are irrelevant, correct? So factory overheads, I have to take only 90 lakh rupees per annum because this 90 lakh is the insurance cost that I am taking because of this project. Clear? So this is an opportunity. This 90 lakh is a relevant cost. Okay, this 90 lakh is a relevant cost. And all these factory overheads are irrelevant. You should take only 90 lakh rupees. Yes, yes. It is not relevant for making a decision. That is the reason we are not taking idle labor or also we are not taking allocated overheads. Okay. The company's tax rate is 13% and all the present value factors are given. Question understood? Question understood, you will be able to solve the problem. Online students understood the question first. See how many adjustments we have to make. Now let us, now let us do the adjustments. Now let us do the adjustments. This is question number 10. Question number 10. This alone I will do, little speed. Okay, this alone I will do little speed because we have to increase the speed. Okay. First one, what is the first step? Initial cash. Okay, initial cash outlay. Initial cash outlay first will be the cost of machinery, but cost of machinery should be 0 because it is an outflow over the period of years. So cost of machinery will not come. Okay. Second one, what will come? Second one, what will come? Compensation to terminate the. Okay. Compensation to terminate the contract. This we are paying on year 0, correct? This we are paying on year 0. This 90 lakh is something we are paying on year 0. Thus this becomes my initial cost. Clear? This becomes my initial cost. Second, working capital also 60 lakh I am paying. Okay, working capital also 60 lakh I am paying. So working capital investment is 60 lakhs. Is there any other initial cash flow? No initial cash flow. So what is my initial cash flow now? 150 lakh. Now just create one more working note. Okay, just create one more working note. Working note number 1, working capital investment. Working capital investment. Okay, year 0, 1, 2, 3, 4, 5. Okay, year 0, 1, 2, 3, 4, 5. Year 0, it is working capital investment. Year 0, how much you have invested? 60 lakh you have invested. Okay, this will be working capital recovery and the balance will be the working capital position that you have to maintain, which means the stock that you have to maintain. Here, what is working capital? Stock. So working capital to be maintained. Okay, working capital to be maintained. Okay, working capital to be maintained. So 0th year you will not recover anything. Okay, 0th year will not recover anything. Now in the question what they have given, I have to maintain how much? I have to maintain 165. Okay, so my working capital investment should be, let's read the question, 165 in 1, 2 and 3. Okay, 165 in 1, 2 and 3 working capital investment, 165 in 1, 2 and 3, 165 and 165, 1, 2 and 3. Fourth year is nil. Actually we don't have any fifth year. Okay, fourth year is nil. Clear? This is my cash flow. Okay, this is my working capital to be maintained, or working capital position. Okay, working capital cash flow position. So first year how much I have invested? Minus 60 lakh I have invested. Clear? 0th year minus 60 lakh I have invested, that I already put in initial. Now this 60 lakh I will recover in the first year. Correct? So what will be my second year investment? 105, right? Negative 165 minus 60. So negative 165. So first year I have to invest 105 to maintain an investment of 165 lakhs to use the material of 165 lakhs. Now this 165 will be recovered here, 165, this will become 0. I have to recover this 165, this will become 0. I will recover this 165. So 165 recovered. See, this is how. Usually what you will do, 0th year you will put minus 60, end of the year 4th year you will put plus 60. But here first year again we are investing 105. So 105 and 60 rendume சேர்த்து we are recovering it in 4th year, which is 165. Are you all able to understand this working note alone? If you understand this working note, this is your working capital cash flow. Okay, 60 will go in 0th year. This first year cash flow will come under the NPV schedule. Understanding? Online students, this is the one tricky point. This is one tricky point in this question. Are you understood, online students?
Yes, sir.
Okay, clear. Okay, so working capital investment and working capital recovery, and this is working capital for cash flow, which is nothing but working capital position. Okay, the net position of working capital. 0th year I have to invest 60 lakh. First year I have to invest 105 lakhs. Only then 4th year I will recover both 165 lakhs. Okay, 4th year I will recover both 165 lakhs. So this 165 is the terminal cash flow. This 165 is the terminal cash flow. Clear? First point is completed, initial cash outlay. What is the second point? Second point is annual cash flows. Year 1, 2, 3 and 4. Let's do it very speed. First will be sales. What is sales? 966, 1254 minus my material consumed. What is my material consumed? Minus 90, minus 120, minus 255, minus 255. Then what I have to do? I have to reduce wages. Okay, out of this 255, 45 is idle time payments. Okay, so what is my wages? What is my net wages that I have to consider for capital budgeting? It is minus 180. Here also out of 255, 30 rupees is idle payment. Okay, 30 rupees is idle payment. So what is my net wages here? 195. Okay, 195. Then third year I don't have any idle payment. Fourth year I don't have any idle payment. So this will be 255 and this will be 300. Clear? Sales minus material minus wages. Okay, then what we have? Minus, then what we have? If we see the question, then we have other expenses and factory overheads. Other expenses take as it is, factory overheads take only 90 lakhs. Okay, so let's take other expenses. So what are other expenses? 120, 135, 162 and 210 minus factory overheads. Under factory overheads I don't have to take allocated overheads. Okay, I have to take only insurance. So don't write factory overheads, write insurance. Okay, insurance cost. So what is my insurance cost? 90 lakhs, 90 lakhs, 90 lakhs and 90 lakhs. Okay, 90, 90, 90 and 90. Clear? Till here you are all clear? Okay. Then minus depreciation. So depreciation as per income tax directly you have to take. Okay, directly you have to take depreciation as per income tax. So depreciation as per income 150, 114, 84 and 63. 150, 114, 84 and 63. You all are solving with me, right? You all are solving with me. Many adjustments are there. So minus depreciation. Now, what's the next thing? What's the next annual cash flow?
Loss of rental.
This 150 lakh rupees per annum is there now for the period of next 4 years. For the period of next 4 years. So this is my annual cash flow, correct? Cash inflow, cost saved, opportunity benefit. This is my cash inflow. Had I paid this 50 lakh rupees, I would have got some tax benefit also. So my net inflow is not 150 lakhs. My net inflow is 150 and then tax saving also. My tax expense also. Clear? Clear? This is one tricky point here. Okay. So plus payment to contractor which we have saved. Okay. Savings which we have saved. What is the payment of contractor? 150. 150, 150, 150, 150. Okay, 150, 150, 150 and 150. On this tax will also come. That is the reason I am putting here, correct? Because tax benefit also I will get. So either you can put this payment to net and then you have to put it below. But why I am putting here? Because any of tax calculation till now I have not did, correct? I will do the tax calculation below. You can ask a question. Now 150 is also adjusted in tax. Yes, this is also adjusted in tax. So plus payment to contractor save. What is the next thing? What is the next annual cash flow? This one, profit foregone, is an opportunity cost. So every year 30 lakh is my rental cost. Okay, every year is my rental loss. Clear? So minus rent loss for storage of materials. Correct? Rent loss. How much is the rent that I was losing? 30 lakhs, 30 lakhs, 30 lakhs, 30 lakhs. Clear? Now what? Now what we have to do?
Interest at 14.
Interest. Okay, interest at the rate 14%. So minus interest at the rate 14%. So interest, how you should calculate? Okay, just prepare one schedule. Okay, just prepare one schedule. Just prepare one schedule for interest. You just take working note number 2. Okay, working note number 2, interest schedule. Okay, interest schedule. So opening loan, interest, closing loan. Okay, I mean payment. Opening loan, payment, interest and closing loan. Okay, payment is also there. 1, 2, 3, 4. How much? 600. Okay, 600. 600. First year interest evlo? Interest ka appro payment evlo? 80, 84. What is the payment? 1 minute. Yeah, this is not the proper schedule. 1 minute. Because not compound, this is simple amortization. Okay, simple amortization. So interest, okay, year and interest amount. 1, 2, 3, 4. First year I will pay interest on 600 lakhs. So 600 into 14% evlo? 84. Second year I will pay interest on 600 minus 200. Clear? Into 14%. So what is my interest? Sorry, 150. 150 is the annual payment that I am going to make. So 63. Okay, now here 600 minus 150 evlo? 600 minus 150 is 450. Okay, so 450 minus 150. Here I have to calculate 14%. 42. Fourth year, how much is the interest? Okay, 300 minus 150 into 14%, I will get 21. Okay, so this is my interest. So I have to reduce interest also. I have to reduce interest also. So I'm having interest of 84, 63, 42 and 21 pa. Okay, clear? Everything we consider or anything else we are missing? Yes. Why are we considering this for tax purpose? Because these are tax deductible items, right? Rent is a, yeah, you are not saving complete, okay? You are not saving complete 150. You are saving only 150 minus 35%. You are saving only 97.5. Because there you are getting tax benefit, here you are getting tax expense. Clear? There also net cash flow you were expensing. So whatever you are expending, that only you are saving, correct? So there your net cash flow was 150 into 1 minus t. So here your net benefit will also be 150 into 1 minus t. Clear? So now this will become my profit before taxes. So tell me, what is the profit before taxes? 372, 369, 486 and 435. Clear? This is my profit before taxes. Now I have to do minus taxes. Minus taxes at the rate, how many percentage? Tax is 35, yeah? Okay, tax is 40. 30 percentage, okay? 30 percentage is the tax rate. Can you all tell me the tax amounts, please? Then I will get profit after taxes. I have to add back depreciation again to get the cash flows pa. Is this a good problem? Okay, this problem will not come in exam, don't worry. But you know, 1 or 2 adjustments from here will come pa. 1 or 2 adjustments from here will come. So here you handle one thing is amortization of loan. This thing you have handled. Because equal installment, if loan is paid, then it will not come under initial cash flows. Now what are the taxes? PAT, then add back depreciation and tell me the cash flow. கொஞ்சம் குயிக்கா சொல்லுங்கப்பா. Okay.
40. Tax amount 111.6.
110.7.
70. 145.8.
145.8.
130.5.
130.5. Great. Now what is my PAT? 200 and
வரிசையா அந்த கணக்கு போட்டுல 372 into 30% போட்டு minus equal to போட்டாக்கா பேட் வந்துரும். டைம் சேவ்.
yeah, but we have to write like this in the exam. We have to present like this in the examination.
We have to write like this only. So here 372 into 30% we are finding in calculator.
Yeah.
அந்த அமௌண்ட் அங்க போட்டு minus equal to போட்டு பேட் வந்து பேட் கீழே போட்டு then we have
Yeah, yeah. Correct. See, this is one shortcut. Okay, this is one shortcut. What Vijay is telling, 372 into 30%. If you do na, you will get the PAT. Okay, 111.6. Once you do minus equal to, you will get the PAT amount also. So what is PAT amount? 260.4. Clear? So just both values you can put. Okay, 369 into the for 30 percentage is 110. Just you put minus equal to, you will get the remaining amount 258.3. Are you all getting this? Just a shortcut way. Okay, so 2 values you are writing at once instead of calculating it. So you will be saving your 1 minute. Okay, you will be saving your 1 minute in calculation. 1 minute is very precious. Okay.
Last one 304.5.
Okay, 304.5. Now we have to add back the depreciation. Okay, we have to add back the depreciation. The depreciation is 150, 114, 84 and 63. Once you add back the depreciation, you will get the cash flow. You will get the cash flow. Now what is the cash flow? $410.4, 372.3,
424.2,
424.2,
367.2.
367.5. Okay, Now see, step by step if you do now, you will be able to solve. Initial cash flow completed, annual cash flow completed. Now what is the third one? Terminal cash flow. Okay, third one is terminal cash flow. Third step, terminal cash flow. See, if you see the institute answer now, everything is in the same NPV table, it will be very kacha mucha. Okay, so you will not be able to understand things. Now terminal cash flow, if you see, what is the terminal cash flow here?
Compensation for contract.
The machinery can be sold at 60 lakhs. Okay, the machinery can be sold at 60 lakhs, and then this 45 lakh is the cost of dismantling. Okay, so scrap value of machinery, one terminal value is scrap value of machinery. Scrap value of machinery. What is the scrap value of machinery? 150. Yeah. 60 lakhs, right?
60 lakhs, sir.
Yeah, 60 lakhs. Okay, 1 minute. 60 lakh is the scrap value of machinery. Inflow or outflow? Inflow. Now to remove that machinery, you have to pay some cost. Okay, so minus cost of dismantling. Minus cost of dismantling. What is cost of dismantling? 45 lakhs. Okay, so what is the terminal? Okay, net scrap is 15. Anything else? Anything else you can calculate? You will say tax adjustment on scrap. Yes. Why not? There is a scrap value. WDV is not given. Okay, WDV is not given. So that is the reason we cannot calculate the tax, because what is WDV? WDV should be as per books, but depreciation is given as per income tax. Had depreciation was given as per books, na cost minus all the depreciation you would have done, you would get the WDV. From that WDV you will compare the scrap value and then you will put the tax benefit or expense. But since your that information is not given, you are assuming that scrap value has no tax impact, so there is no capital gain or capital loss impact. We are ignoring the tax impact. Clear? Online students, are you clear on this point? So what is my net scrap now? What is my terminal cash flow? 15. Okay, 15. Now everything we considered. Okay, everything we considered. Now let us put the
Compensation 90 lakhs.
compensation. 90 lakhs is already considered in the initial cash outlay, right? Compensation to terminate the contract, I have to pay at year 0. I have to pay at year 0. If you read this question, this 90 lakh has to be paid before the processing operation starts. That is the reason I have considered it as initial cash flow. Okay. Now, next step, computation of NPV. Okay. Yeah. See, 150 lakhs. No, this is inflow only. Na? This is inflow minus taxes. So net inflow is already considered here in cash flow. Yeah, tax flow is already considered. In this taxes, the impact of payment of contractor is also there, and this rent loss tax impact is also there in this taxes. See, there is one way. Wow, how institute has solved? Now institute has solved payment of contractor saved, less tax. They have put in NPV schedule. What I have did, I have just directly put it here because this is easier. Pa. See, whenever you are having a standard approach, follow a standard approach, you will get the right answer. Okay, follow standard approach. Institute, why it is happening this na? Problems are framed by different persons, solutions are given by different persons, so different person will be having different approaches. Okay, so that is the reason you will not find a standard template in institutes. You just have to take idea from the institute but have a standard template in mind. That is the only advantage of attending classes, is that you will get a standard structured way to solve a problem. So computation of NPV 0, 1, 2, 3 and 4. Okay, 0, 1, 2, 3 and 4. First, initial cash outlay. What is initial cash outlay? 150. Clear? Second one, Annual cash flows. What are my annual cash flows? Come on. 410.4, 372.3, 424.2, 367.5. Annual cash flow completed. Third one, terminal cash flow. Okay, what is my terminal cash flow? 15. Yeah. Terminal cash flow. Working capital recovery we missed, right? Working capital recovery we missed. But yeah, one more thing. Because we are having adjustment in working capital, don't put in terminal cash flow now. Okay, we will put here as a separate line item. Okay, so what is my terminal cash flow? 15. Now you put working capital adjustment. Okay, working capital adjustment. So what is working capital adjustment? 0th year you have invested 60 lakhs, but that 60 lakhs you already considered in initial cash outlay. So don't put any 0th year. First year how much you have invested? 105 rupees. Sorry, 105 lakh. And 4th year how much you recovered? 165. Clear. Working capital adjustment also done. Clear. Next one, loan repayment coming. Yeah, loan repayment. Now what is happening here? You have not considered 600 rupees in initial cash outlay, but that 600 rupees is coming 150, 150, 150 and 150 as loan repayment. Loan repayment is also a cash outflow, correct? So that will come as a cash outflow. Clear? So all these are in NPV adjustments, which means it cannot be, bring into all these three brackets. Initial, terminal, this cannot be bring under this bracket. Now you can ask, sir, loan repayment, why didn't you consider in this, in the annual cash flow table? You all can ask a question, right? In the annual cash flow table, you could have considered loan repayment. In annual cash flow table, tax impact is there. Loan repayment, there should be no tax impact. Principal amount, right? So loan repayment you will not have, but still you can add here also. After cash flow you can, less here, loan repayment, and then you can put here. But why I am putting it here? Just to show it separately. Okay, show it separately. Loan repayment. Is there any other item? No item. Clear? So now you have the cash flow. You have the total cash flow. What is total cash flow? 150. Little quick, 150 here. See, I can see in the meet, people are coming and going. 155.4. Second, 222.3. Third one, 274.2. Fourth one, 397.5. 397.5. Okay, now present value factor at the rate, how much percentage pa? At the rate how much percentage? At the rate 14%, right? It is already given in the question. These present value factors are already given in the question. 14%, first year, second year, third year, fourth year, already given in the question. Directly take the values. Okay, this will be 1. This will be 0.877, this will be 0.769, this will be 0.674, and this will be 0.592. Calculate the discounted cash flow. This is minus 150. Please tell what is this amount. 136.28. This one 170.95. 184.81, 235.32. Clear? What is my NPV pa? It should be somewhere around 500. Huh? 577.36 pa. Okay, 577.36 is your NPV. Clear? Online students, did you enjoy this problem? My first question is, did you enjoy this problem? Okay, 577.36. If you take RTP November 2020, you will find the same question. You will get the same answer 577.36. But if you see, many kacha mucha has been done there. Okay, so you will not be able to understand that, because somewhere some value is given, somewhere some other value is given. Here in NPV they have given payment to contractors, then less tax savings on payment to contractors. So lot of things they have did. What we did the problem in a structural manner based on a standardized approach. Understood? What is your name? Deepika. Okay. So NPV is 577.36. Okay. Question number 10 completed.
ஆக்சுவலாக ஆர்டிகல் என்ன பண்ணியிருக்காங்கன்னா, இந்த ஃபர்ஸ்ட் ஷெட்யூல்லேயே வந்து ஆப்ரேட்டிங் ப்ராஃபிட் கண்டுபிடிச்சு நம்ம 150 ஆட் பண்ணியிருக்கோம்.
Yes.
அந்த ஆட் பண்ணதுனால டேக்ஸ் கால்குலேஷனுக்கு ஆட்டோமேட்டிக்காக அது அட்ஜஸ்ட் ஆயிடுது.
Yes. Yes.
அவங்க என்ன பண்ணியிருக்காங்க, இன்க்ரிமெண்டல் கேஷ் ஃப்ளோவில் வந்து 150 ஆட் பண்ணிட்டு தனியாக 45 டெபிட் பண்ணியிருக்காங்க.
Yes. Same thing. Ada same thing. The
பட்
net effect is same. See, net effect is same. I am considered more about the approach. See, if some person is not able to understand that, then there can be a problem, right? He can ask a question, why here tax impact is there, their tax impact is not there. So approach should be proper.
இந்த அப்ரோச் என்னன்னாக்கா, அந்த டேக்ஸ் சேவிங் ஆட்டோமேட்டிக்காக அட்ஜஸ்ட் ஆயிடுது, தனியாக போட வேண்டாம்.
Yeah. Because appadi போட்டிங்கனாக்கா this rent loss should also come there. Why they put that rent loss in this schedule, and 150 they brought into NPV schedule. Okay, so somewhere some amount is there, some amount is there, putting it some other place. So always have a standard approach. It is better to follow standard approach. But yeah, you are comfortable to use anything until you are getting the answer 577.36. Okay, clear? Question number 10 completed. With this our investment decision is also completed. Investment decision is also completed, and also risk analysis in capital budgeting we saw this, sensitivity analysis we saw this problem. Okay, one minute. The conclusion is, since it is positive, okay, since the NPV is positive, the management should management is advised, okay, management is advised to install the machinery to process the waste. Okay, this is the okay. Here, since we have a positive NPV, of 577.36, the management is advised, okay, don't tell the management should, okay, you are not there to order. The management is advised to consider purchasing the machinery, okay, consider purchasing the machinery or installing the machinery to process waste. Okay, to process waste. Clear? It took little bit time, okay, I think we took almost 2.5 hours and we completed only 3 problems, and those 3 problems are related to investment decisions. But ratios and analysis will be little quick. Okay, ratios and analysis now will start, that will be pretty quick. So these questions we handle. Can we go into ratios and analysis now? Then we will go cost of capital. Okay, let's go to ratios and analysis. Take out chapter number 1, sorry, question number 1. So question number 1. I have now told you approach, right? How to approach ratio analysis. I think I told you in that class. This class I have not told you. Whenever you get any problem in ratio analysis, you should follow a certain approach. First approach is that always identify where numbers are there. Okay, always identify where numbers are there. Second step will be, you should identify where this number can be used in some formula, whether that number can be used in some formula, that you have to identify. Once you got that, then you will find all the values. If you are not able to identify, keep a variable x and then solve. Okay, this is the approach. Whenever you are reading any ratios problem, this is the approach you have to follow. So don't get confused. What is the formula? What should be the formula? What should be there? Always follow the approach. Okay. Now let us read the question number 1. Okay. Online students, are you all with me? Can we continue ratios, or with a heavy problem you want a break? Because we completed that heavy problem.
Yes, sir, we will proceed.
We will proceed. Okay. Now we'll go with ratios. Let us read this question. Following are the data of ABC. Okay. Long term to total asset ratio is 0.4. Okay. Long term to total asset ratio. Okay. Debt to total asset ratio is 0.4. Long term debts to equity ratio is 30%. Gross profit margin of sale is 20%. Accounts receivable period 36 days. Quick ratio 0.9. Inventory holding period 55 days. Cost of goods sold 64 lakhs. Okay. And then they gave a balance sheet. And here incomplete values are there. We just have to fill the balance sheet. So this question is about filling the balance sheet. Complete the balance sheet. All the calculations should be nearest rupee. Assume 360 days in the year. Even though they are not giving, in whenever ratio analysis problem is coming, if days are not given, always assume 360 days. If given 365, don't take 365, don't take 360, take 365 only. But usually we have to take 360 only if nothing is given. Okay. Now let us start the problem. Okay. Let us start the problem. Let's see wherever numbers are given. Okay. See wherever numbers are given, that we have to see. Now see here. First thing what we can do, this total is 50 lakh. Now this total will also be 50 lakh. Okay. This total will also be 50 lakh. Always how to solve the problem. Okay. In examination, how to solve this problem. Write question number 1. Okay. Question number 1. This is how I will solve in exam. Okay. Question number 1. If it is part A, na put part A. Put part A. Always put in center. Okay. I'm just giving you how to present in examination. If you are presenting like this, you will get full marks. I mean, not, it will look good. Question number 1, it should be in center. Put a box. Okay. Put a box or underline, whatever comfortable. If we are having subparts, na, it should be part A. One more thing, question numbers can be solved in any sequence, but part numbers should not be solved in any sequence. Part number should be sequential. If you want to first solve question number 4, write question number 4. You cannot do question number 4 part B first, then question number 1 part B. Okay, don't do like this. It will be very confusing and you will be able to lose marks. Question numbers can be done in any sequence, but part should be done in order. So question number 1, part A, part B, part C, part D. Then see which question you have to solve. Suppose question number 3 you are solving, na, question number 3, part A, part B, part C. Question number 5, part A, part B, part C. Then question number 2, part A, part B. Okay. Even if you are not knowing any part, na, leave the page and continue with part B. Okay. But don't directly put part B and solve. Part A put, if you don't know part A, leave 1 or 2 pages, then go to part B. Always leave pages, because in the end, if you get time, you will write something to gain marks. Okay. Otherwise, once you see empty pages, you will have that motivation, I have to write something. Okay. So this is how you have to present. Now question number 1, suppose if it is part A. First you have to present the answer. So answer is balance sheet of ABC Limited. Okay. Balance sheet of ABC Limited. Liabilities and assets. Okay. Liabilities and assets. Directly put that balance sheet here. Okay. Directly put the balance sheet here. Equity share capital, reserves and surplus, long term debts. Okay. Accounts payable, and then total. This total is given as 50 lakhs. And equity share capital is given as 50 lakhs. Okay. Then what's given? Fixed assets, okay, inventory, accounts receivable, and cash. This total is not given. Okay. This total is not given. This is the question. Always ratios and analysis, marks are given for working notes. Okay. Marks are not given for filling the balance sheet. Marks are given for working notes. So how to present the answer, now I am telling you. Even though you are writing this total as 50 lakh, you should have a working note for this. Put working note number 1. Okay, working note number 1. Here you put working notes. Put working note number 1. Total liabilities is equal to total assets is equal to 50 lakhs. Clear? Done. Now you have this number total assets, correct? You have this number total assets. What I said, whenever you're having a number, see whether you can use that number or not. See, debt to total assets ratio is 0.4. You have total assets, so you can find out debt. Clear? So let us do this in working note number 2. Let us do working note number 2. What is working note number 2? Debt to total asset ratio is 0.4, okay, which is nothing but debt to total assets is equal to 0.4. So debt divided by 50 lakhs. Debt divided by 50 lakhs is equal to 0.4. Therefore, debt is equal to 50 lakh into 0.4. Evlo? 20 lakhs. I usually used to do a dabba so that they will see, okay, debt is 20 lakhs, okay. So it is better, you know, to highlight the answer. It is better to highlight the answer. So debt divided by 50 lakhs is equal to 0.4. So debt is equal to 20 lakhs, okay. Debt is equal to 20 lakhs. Now you all will be having a question, sir, debt is there, but we have long-term debts. So this is nothing but this debt is long-term debt and also short-term debt, okay. So this also includes accounts payable. So directly you cannot write, you only know debt. It is not given long-term debt or short-term debt. So it is a debt. So how much is debt? Debt is 20 lakh rupees, okay. Till now it's clear, pa. Debt is 20 lakh rupees, you know, okay. These two values 20 lakh rupees, you know. Now only one unknown is there. Equity share capital is 20 lakh. This debt is 20 lakh. Total is 50 lakh. So you can find out reserves and surplus. Clear? You can find out reserves and surplus. See, this should be the approach. Slow by slow, missing values you have to find out, and then the remaining will be the balancing figure, okay. Remaining will be balancing figure. Now put working note number 3. What is working note number 3? Total liabilities, okay, total liabilities is equal to equity share capital plus reserves and surplus plus debt. Clear? What is total liabilities? 50 lakhs is equal to what is equity share capital? Equity share capital is given, right? 20 lakhs plus reserves and surplus plus what is debt? 20 lakhs. Okay, so now you put reserves and surplus is equal to 50 lakh minus 40 lakh. Therefore, reserves and surplus is equal to 10 lakh rupees. Reserves and surplus is equal to 10 lakh rupees. Now what you do, you go into the balance sheet, write working note number 3, okay, write working note number 3 and put 10 lakhs. Clear? We didn't solve yet. Long term debt to equity I didn't go yet, okay. Any doubts you're having? This thing we did, debt to total asset ratio, okay. Now let's go to second one, long term debt to equity, okay. Long term, your question is whether it is long term debt by equity or long term debt by equity plus reserves and surplus. That is what your question is, right? You can go with any assumptions, okay. You can go with any assumptions. Long term debt divided by equity, I will go long term. What is equity plus share capital? It is nothing but the shareholders funds, okay. So either you can put long term debt divided by shareholder fund, or you can directly put long term debt by only equity share capital. Let us go with the second assumption, okay. Equity and reserves and surplus. Both the assumption is correct. Even in the suggested answer, it is solved in both the ways, okay. Fourth one, what is this? Long term debt, okay. Long term debt divided by equity shareholders funds, okay. Equity shareholders funds. Evlo? How much it is? 30%. Are you all solving with me? Ratios and analysis is nothing but approaches, okay. It's nothing but approaches, fill in the blanks, logics. So long term debt divided by equity shareholder funds is equal to 30%, okay. So this is long term debt. Equity shareholders is nothing but equity share capital plus reserves and surplus is equal to 30%. So long term debt is equal to, what is equity share capital? 20 lakhs. What is reserves and surplus? 10 lakhs into 30%. So this is nothing but, therefore long term debt is equal to 20 plus 10, 30 into 30%, 9 lakhs. So long term debt is equal to 9 lakhs. So working note number 4, long term debt 9 lakhs. Okay, working note number 4. Long term debt is 9 lakhs. Clear? Now we already know this total is 20 lakhs, so your accounts payable will be 11 lakhs. So you put a working note number 5, put as 11 lakhs. Working note number 5, 11 lakhs. So what is fifth working note? Debt is equal to long term debt plus accounts payable. Okay, accounts payable. What is your debt? 20 lakhs. What is your long term debt? Long term debt is 9 lakhs plus accounts payable. Okay, plus accounts payable. Therefore, accounts payable is equal to 20 lakh minus 9 lakh. 20 lakh minus 9 lakh. Therefore, accounts payable is equal to 11 lakhs. Put working note number 5, accounts payable 11 lakhs. Okay. I'm also giving you how to present the answer. Only if you present the answer, for each working note 0.5 marks, 0.5 marks, 0.5 marks you will receive. Okay. For each working 0.5 marks. Even, okay, I will give you one trick. Even if you're not, even if you don't know one formula, at least try to solve whatever is possible. At least from till 10 marks you will get at least 8 marks. Okay. Two ratios are wrong, at least you will get 8 marks. So ratio analysis is a very scoring. Even if you are not able to construct the balance sheet properly, calculate the ratios properly, calculate the items properly, whatever you know. Once you know all this, you will get marks for that. Step marking is there. Okay. Using step marking only you will be able to pass. Done. Now if you see liability side, we already completed. Now let's come to the asset side. Okay, let's come to the asset side. Let's come to question. This we already used. Okay, this we already used. Now we have this number called as cost of goods sold. Cost of goods sold somewhere I can use, correct? Cost of goods sold somewhere I can use. Where I will use? Okay, first gross profit margin on sales. What is gross profit? Gross profit is equal to sales minus cost of goods sold, correct? Yes. Sales minus cost of goods sold. You know the value of cost of goods sold. Okay, you know the value of cost of goods sold. So gross profit divided by sales into 100. Okay, gross profit divided by sales into 100 is equal to 20%. Okay, gross profit is equal to sales minus cost of goods sold. So working note number 6. Gross profit divided by sales is equal to evlo percentage? 20%. Okay, what is gross profit? Sales minus cost of goods sold divided by sales is equal to 20%. If you know cost of goods sold, you will be able to find out sales. So what is cost of goods sold? It is directly given in the question, 64 lakhs. So sales minus 64 lakhs divided by sales is equal to 20%. Okay, is equal to 20%. So just do 0.2 sales. Okay, so sales minus 64 lakhs is equal to 0.2 into sales. Okay, 0.2 into sales. This 64 lakhs will come here, 0.2 will come here. Okay, so sales into 1 minus 0.2 is equal to 64 lakhs. Therefore sale is equal to 64 lakh divided by 0.8. Okay, therefore sales is equal to 64 lakh divided by 1 minus 0.2 is 0.8. Therefore sales is equal to 80 lakhs. 80 lakhs. Clear? Working note number 6. Sales is equal to 80 lakhs. Okay, sales is equal to 80 lakhs. Now you found out sales. Now why we need sales? Now using sales, what you can do? Using sales, what you can do? Accounts receivable period. Okay, accounts receivable period, you want sales. But what is the formula for accounts receivable period? Okay, it is the formula is credit sales divided by no See, accounts receivable period is 36 days. So what is 36 days actually? Accounts receivable, okay, accounts receivable divided by credit sales per day. Okay, credit sales per day. Not understanding the formula, huh? Any formula you can use. See, logically, what is accounts receivable period? 36 days is my accounts receivable period, which means if I'm having a total sale of 10 lakh rupees, so 10 lakh divided by 360, okay, 10 lakh divided by 360 will be my what is my total sales? 80 lakhs. Okay, what is my total sales? 80 lakhs. Okay, 80 lakhs is my total credit sales. So this is sale for 360 days. Okay, this is sale for 360 days. Now what is my sale for 1 day divided by 360? What is my sale for 30 days? What is my sale for 36 days? It is 7,99,999, correct? It is 7,99,999. So what is my accounts receivable? It is 8 lakhs. Clear? Yeah, with that also you can do any method you can use. Yeah, answer will not change. How answer will change? Same formula only now. I'll tell you the logic. See, I'll tell you the logic. What is accounts receivable period? Out of my total sales, 36, out of my 360 days of sales, 36 days of sale is my accounts receivable. This is what is accounts receivable period. Okay. Now what is my total sales? 80 lakh is my total sales, correct? 80 lakh sales is for 360 days. So for 36 days, how much is my sales? So for 36 days, what I will get? See, this 80 lakh is for overall period. So divided by 360 into 36. Okay, into 36, what I will get? 8 lakhs. So this 8 lakhs is nothing but the accounts receivable. Are you all getting this? This is the logical way of understanding. Formula way is nothing but accounts receivable divided by credit sales per day. Same thing I'm doing. Accounts receivable divided by this credit sales divided by 360. Okay, credit sales divided by 360, what you will get? 36 days is equal to 36 days. Is equal to 36 days. Understanding? Logically you understood. See, when we mug up the formula, then only we will, we will be in difficulty. Accounts receivable period means my 36 days worth of period is my 36 days worth of sales is actually my accounts receivable. That is what he is trying to tell. So if 80 lakh is for 360 days, then what is for 36 days? It is 8 lakhs. So 8 lakhs is my accounts receivable. Okay. See, usually no one teaches like this. They always tell the formula and try to solve. Okay, always try to write the formula and solve. But once you know this logic, then you can make your own formula. Inventory turnover ratio is nothing but an application of accounts receivable period. Okay, accounts receivable period. Any doubts? Anu, any doubts? No doubts. Clear? Or some other formula you have in your mind? Yeah, inventory turnover ratio. You derive from inventory turnover ratio, correct? Sorry, this receivables turnover. Accounts receivable turnover. See, however you do, if you are getting the right answer, which is 8 lakhs, it is correct. Okay? It is just our way of understanding. Online students, you understood now what I am telling. Seventh one. Okay, seventh one. Accounts receivable period is equal to 36 days. Okay, accounts receivable period is equal to 36 days. Okay, accounts receivable. Assume all sales are credit sales. Okay, because we don't have credit sales, cash sales, so assume all sales as credit sales. Okay, assume all sales as credit sales. Okay, assume all sales as credit sales. Now accounts receivable is nothing but total credits, total sales divided by 360 into accounts receivable period. Are you all understanding? I will solve in all the methods for you to accounts receivable is equal to sales divided by 360. So I am getting sales for 1 day into how many days? 36 days. So what is sales? 80 lakhs divided by 360. What is my AR period? 36 days. So what is the answer? 7 lakhs, 8 lakhs, sorry. Okay, this is one way. Second way, we have a formula. Accounts receivable period is equal to accounts receivable divided by sales per day. Okay, credit sales per day. Okay, this is credit sales per day. Credit sales per day. Now what is my accounts receivable period? Accounts receivable period is 36. What is my accounts receivable? This is what I have to find. So credit sales per day is equal to 80 lakhs divided by 360. Correct? 80 lakh divided by 360. So once you put this 80 lakh divided by 360 here, okay, once you get this 80 lakh divided by 360 here, so I will get accounts receivable is equal to 80 lakh divided by 360 into 36, okay, because I am taking this here. So what is the amount that I am getting? 8 lakhs. Is there any other way you know? This much only, yeah? Okay, debtors turnover ratio, okay. So with accounts receivable period, how will you find out? So accounts receivable period is equal to 360 divided by, okay, debtors turnover ratio. Debtors turnover ratio is equal to 360 divided by, okay, accounts receivable period, okay. Okay, so what is my debtors receivable? 360 divided by 36 is equal to 10 times, okay, 10 times. Then, so now debtors turnover ratio is equal to credit sales divided by average receivables, okay, average receivables. What is debtors turnover ratio? 10 times. What is your credit sales? 80 lakhs divided by average receivables. So average receivables is equal to 80 lakh by 10, okay, average receivable is equal to 80 lakh by 10 is equal to 8 lakhs, okay. Three methods, any method you follow, you will get 8 lakhs only. See, every method is having a logical understanding, okay, every method is having a logical understanding. But at least now you know many formulas, at least with this now you know many formulas. Accounts receivable formula you know, accounts receivable period formula you know, debtors turnover ratio formula you know, okay, 3 formula you learned from here. From this only 3 formulas you learned. Debtors turnover ratio formula you learned, okay. This is one more debtors turnover formula ratio. 2 debtors turnover ratio you learned. Accounts receivable period formula you learned. Then accounts receivable formula you learned, okay. But do you want to get confused with you all these formulas? You just have to understand one formula logically, everything can be derived. Clear? Simple. So 7th, working note number 7. Working note number 7 is 8 lakhs. Okay. Working note number 7 is 8 lakhs. Now, working note number 7 is 8 lakhs. Now let's do first inventory holding period, because inventory holding period what we want? Inventory holding period what we want? We only need this COGS, correct? We only need COGS. Inventory holding period. Here also you can solve in any method, but here I won't give you complete overall circle. 6th, 7th, 8th working note. Inventory holding period, correct? Inventory holding period is equal to how many days? 55 days. What is inventory holding period? It is nothing but inventory divided by COGS per day. Simple. Debtors holding period is equal to average receivables divided by credit sales per day. That is logically I used to, used to do as a student. So what is inventory holding period? 55 days is equal to inventory, okay, inventory divided by COGS per day. Divided by COGS per day. Okay, if COGS is given, use COGS. If COGS is not given, use sales. Okay, always the formula is sales slash COGS. Okay, when COGS, cost of goods sold, is given, use cost of goods sold. If cost of goods sold is not given, use sales. Clear? 55 days. Now what is my COGS per day? Okay, equal to inventory. What is my COGS? 63 lakhs, correct? 64 lakhs divided by 360 is equal to 55. So therefore inventory is equal to 64 lakh divided by 360 into 55. So what is my inventory now? 9,77,778. Okay. Now one thing will come. Whenever you are solving this problem in exam, you will think something wrong I did, pa. Okay, you will think something wrong I did. This is institute trick. This is correct answer only. Okay, this is institute's trick to get some round to not get some round amount. You will think something is wrong. You will spend some more time. Okay, what is the problem? But actually this is correct only. Actual inventory is 9,77,778. So working note number 8. Working note number 8. 7,77,778. Okay, sorry 9,77,778. Okay, pa. Now what you have? Now you have quick ratio. Now you can see, usually using quick ratio, inventory is removed. In quick ratio, inventory will not come. Correct? Current asset ratio and quick ratio ko one difference is inventory will not come. Understanding, right? I'm also teaching the concepts of, because yesterday I didn't teach ratios, because ratios can be understood only through problems. See, current asset ratio is equal to current asset divided by current liabilities, but quick asset ratio is equal to current asset minus inventory divided by current liability. Okay, divided by current liability. Now what is my quick asset ratio? My quick asset ratio is 0.9. Okay, 0.9 is equal to, what is my current assets excluding inventory? I have only accounts receivable plus cash plus inventory only my current asset, but inventory should not come because it is a quick asset ratio. Divided by current liability. What are my current liability? 11 lakhs, which is nothing but average payables. Okay, only one current liability I have, average payables. So 0.9 is equal to, my average receivable is 8 lakhs. Okay, plus cash divided by 11 lakhs. Okay, plus cash divided by 11 lakhs. Therefore, cash is equal to 11 lakh into 0.9 minus 8 lakh. Therefore, cash is equal to 1,90,000. So working note number 9. Working note number 9. Cash is equal to 1,90,000. Now what is fixed assets? Balancing figure. Okay, balancing figure, but don't directly write. Always put a working note. Okay, always put a working note. Working note kada mark. For this also it asks you to put working note. Okay, working note kada mark. Okay, so fixed asset working note number 10. Working note number 10 is equal to total assets is equal to fixed asset plus inventory plus cash plus average receivable. Correct? What is total assets? 50 lakhs. Fixed asset I don't know. What is inventory? 9,77,778. What is cash? 1,90,000. What is average receivables? 8 lakh. Therefore fixed asset is equal to, okay, 50 lakh minus some, okay, minus some amount. Therefore fixed assets is equal to, okay, 30 lakh 32,222. Okay, okay, fixed asset is equal to 30,22,222. 30,22,222. 30 lakh 22,222. Sum completed. When this sum comes in exam, you will think something wrong I did, pa, because you see some two odd numbers here and there. Okay, so you will think something wrong is done, but nothing wrong. This is what is the correct answer. Clear? See, through ratios, we did some formulas. We did some formulas. One is inventory holding period, receivables period, payables period, inventory holding period, fixed asset turnover ratio, long term ratio, debt equity ratio. All these ratio we will understand through solving problems only. Usually, I already said you, usually this holding period, using holding period, they will ask some problems, or using this quick asset and current asset and quick assets. Now what will happen, sometimes I'll give you one more type. Sometimes they will give current asset is equal to some number, quick asset is equal to some number. Okay, they will give current asset is equal to some number, quick asset is equal to some number. Now using that you have to find inventory. Understanding? Because current asset minus, this is current asset ratio, this is quick asset ratio. Current asset minus current asset divided by current liability is equal to X. Then current asset minus inventory divided by current liability is equal to Y. So if this is 1 and if this is 0.5, then using this you have to find inventory. Okay, like this also problems can come. Clear? Some number will be given, either current asset or current liability, then you will be able to solve. Okay, done, pa. Question number 1 completed. Was that interesting, question number 1, or was that boring or simple? See, this is a 10 marks problem, December 2021 they have asked. Question number 1 is an actual exam problem, December 2021 problem. Okay, online students, are you all with me, right? Understood question number 1? Understood, online students?
Yes, sir.
Very good, very good. Okay, now let's go to question number 2. Okay, slowly, because I framed question in such a way that slowly the difficulty level increases. Okay, but still this was also a typical exam problem. This is also again an exam problem. Here, what is one point, what is one place where student, I will also tell you what are the common mistake that student can make. One common mistake that student can make here is debt divided by total asset ratio. They will get some amount of debt, right? You got the debt as 20 lakh rupees. The same debt they will apply to long term debt to equity ratio. What is one mistake is the same debt they will apply 20 lakh divided by equity is equal to 30%, and then they will find the equity and balancing figure, they will take it as reserves and they will go into the wrong direction. Are you all getting what I am trying to tell? The debt they are finding, right, as 20 lakhs, this 20 lakhs they will apply in long term debt to equity ratio. So 20 lakh divided by equity, equity shareholder funds is equal to 30%. If they take equity share capital only, they will get an amount of equity share reserves and surplus. From reserves and surplus, they will take accounts receivable as balancing figure. So they are actually going into the wrong approach, even though they think that they are doing correct, but this debt is a not long term debt is what we have to understand. Okay, this debt is not long term debt is what we have to understand. Clear? This is one common mistake the student makes. Okay, 50% student make this mistake. Now other common mistake, there are no other common mistake. People feel holding period as difficult adjustments. But once you understand the logic, this will not be very difficult. In fact, this is very simple. And yeah, one more thing where people get stuck is, cost of goods sold, but this cost of goods sold is not used in sales. It has to be used in gross profit margin. So GP is equal to sales minus cost. If you crack this, only then you will get the sales. Otherwise you will not be able to get in sales. Or you have to use that mathematical formula, 1/4 of cost is equal to 1/5 of sales. That thing you have to use. Any way you solve, once you know the logic, you will get the answer. Can we go to question number 2? let's read question number 2, pa. Okay, let's read question number 2. Question number 2 also we'll solve in few time, and then we will have a lunch break. Okay, then what we have, we will have cost of capital will be remaining. Capital structure, working capital I will leave to you, pa. Why na? Because I gave answers also here, but we will discuss. Okay, we will discuss. I gave answers also here because working capital usually long problems will be there, so it will take some time, but yeah, I will solve it. Okay, I will solve it. You all are looking at me, na sir, working capital always you are missing. We'll sorry? Yeah, I don't like working capital, Ada.
But exam question
Yeah, correct. I know. As a teacher, na apdi solla mudiyadhu. But okay. Working capital is one chapter I don't like. As a student itself, I didn't like. As a student, I used to do only the important problems in working capital. What is two types of problem will come. One is the operating cycle problem. Operating cycle is equal to raw material holding period plus working progress holding period plus finished good holding period plus debtors collection period minus this payables period. You will get operating cycle. Then how many operating cycle? 360 divided by operating cycle, you will get number of operating cycles. Then operating expenses will be given. So how many working capital requirement? Operating expenses divided by 360 into number of days, number of operating cycle, you will get the working capital requirement. This is one type of problem. Second type of problem, they will ask you to estimate the working capital requirement. To estimate the working capital requirement, they will give raw material consumption period and raw material holding period. So raw material consumption divided by 360 into raw material holding period. Then WIP 50% is finished, 50% conversion period is finished. So degree of completion will be given. Using that degree of completion, you have to find out raw material, you have to find out finished good, you have to find out WIP, current assets, less current liabilities than working capital. These are the only two types of problems I as a student used to do. And then this some creditor policy, how much credit period policy you have to give, that problems alone I used to do. I used to be able to secure full marks. That is one smart way I used to tackle working capital management. You don't take that risk, study fully. நிறைய இருக்குது. We have EOQ. Yeah, that is not important. My point is, but I cannot tell like that you leave this. Okay, it will be wrong. If that thing comes now, you will message me, sir, you said that this will not come, but because of you I lose 5 marks. You will tell like that. So I always sustain here. Question number 2, ratios. Question number 2. I should not have told I don't like working capital. The recording is also happening. What will people feel about me? Hey, don't tell outside to anyone, okay? All online students, don't tell outside that I don't like working capital. I like working capital. It's just that I'm not having some time to teach, pa. Question number 2. Okay. Question number 2, ratios. Let's read the question first. Are you there, online students? Are you there with me? Can we solve question number 2? After this, we will take a break, okay? Okay. I think you guys are becoming hungry, huh? Your voice is low. Okay, pa. Sorry. We'll quickly complete, okay? Question.
Proceed, sir.
Yeah, okay. Question number 2. Masco Limited, okay? Masco Limited has furnished the following ratios and information relating to the year ended, okay? Sales, return to net worth, rate of income tax, share capital to reserves ratio, current ratio, net profit to sales, okay, after income tax, inventory turnover based on cost of goods sold, interest on debentures, receivables includes debtors of 1,25,000, payables of 2,50,000, bank overdraft of 1,50,000, okay, bank overdraft of 1,50,000. Now see the balance sheet. Balance sheet also they have given share capital, reserves and surplus, 15% debentures, payables, bank term loan, fixed assets, current assets, stock, receivables and cash. Okay, so this will be some total. Okay, this will be the total. Okay. First thing, calculate operating expenses for the year. Okay, first thing is calculate operating expenses for the year. Second is prepare the balance sheet. Okay, two requirements, 10 marks, two requirements. First, calculate operating expenses for the year. Second, prepare balance sheet. So first we will go for operating expenses. You know, yesterday one student messaged me and asked, what is the difference between gross profit and operating profit? Pa? What is the difference between gross profit and operating profit? So let me give some clarity. Do you have this confusion or you know that? See, sales minus cost of goods sold is equal to gross profit. Okay, sales minus cost of goods sold is equal to gross profit. Now here gross profit minus operating expenses is equal to operating profit. This is the only thing. Usually if this detail is not given, if this operating expenses detail is not given, na operating profit usually it is treated as EBIT. Okay, operating profit is usually treated as EBIT if these details are not given. This is the clear cut differentiation between gross profit and operating profit. Under gross profit, operating expenses will not be reduced. Okay, done. Can we solve this? Okay, same, sales minus cost of goods sold is equal to gross profit. Gross profit. Now what we have to find? We have to find operating expenses here. Okay, what we have to find? We have to find operating expenses here. In this question we have to find operating expenses first. So calculation of operating expenses. Let us read the question first. Let us read this question first. See, first always what is the approach? See what numbers are given. Sales number is given. Okay, then this payables, receivables number is given. Okay, so payables you can actually directly write, right? What is payables? Payables is 2,50,000. 2,50,000. Okay, bank overdraft, this is nothing but this bank term loan only. They by mistakenly wrote as term loan. This is overdraft. It is 1,50,000. Okay, then we have receivables. So how much is receivables? Receivables is 2 lakhs. So these are the details what we can use. Okay, these are the details we have used. Cost of goods sold is given. Now with sales and cost of goods sold, what we can find out? Gross profit you can find out, correct? See, first always play with numbers, then use that numbers and play with ratios. Okay, approach of solving problem. Are you all understanding? Okay, now what is the sales? What is sales? Sales is 75 lakhs. Okay, first working note. Okay, first working note, sales minus cost of goods sold is equal to GP. What is sales? Sales is equal to 75 lakhs. What is cost of goods sold? Cost of goods sold is equal to 22,50,000. What is my GP, pa? What is my GP? 52,50,000. You all are there. Why you are very silent? You are reading the question. I gave you time. Okay. You are ahead of me. Advance. Okay. Others with me? Okay. Follow me, pa. Okay. Sales minus cost of goods sold is equal to gross profit. So I got my gross profit amount. Therefore, GP is equal to 52,50,000. Now GP minus operating expenses is what is operating profit. Okay. Now operating profit they have not given, but I can find out EBIT. How I can find out EBIT? I will tell you. See here, I have net profit. I have net profit to sales. So this is PAT, correct? This is PAT. This is PAT. What is actually EBIT? I have to find EBIT. Earnings before income tax minus interest is equal to earnings before tax minus taxes is equal to profit after tax. Okay. This is my income statement. Clear? So what I will do, second working note, okay, second working note, I will just write this earnings before income. This is balancing figure, okay, minus interest, okay, minus interest is earnings before tax, minus taxes is profit after tax, okay, minus taxes is profit after tax, minus taxes is profit after tax. Profit after tax you can calculate because net profit ratio is given 6.5 percentage. So sales into 6.5 percentage is PAT, correct? What is sales? Sales is 75 lakhs into what is my net profit percentage? 6.5 percentage. So what is my PAT? My PAT is 4,87,500. Getting? So I will just do reverse calculation. If I know PAT, what is my tax? Tax at the rate 50%. So what will be my tax? 9,75,000. Okay, so what will be my EBIT? It will be 9,75,000. Correct? I'm just doing reverse order. Or you can even do PAT plus taxes is equal to EBT plus interest is equal to EBIT. Okay, anything comfortable for you, you can do it. Understanding? Or you're having your own methods, sir? Understanding? Okay, ma'am. Earnings before taxes is 9,75,000. Now I have to reduce interest. How to calculate interest, pa? How to calculate interest? See, so interest on debentures is given as 75,000. But what I want interest is given. So 75,000 is given. Okay. So less 75,000. What is my EBIT? 9 lakhs. So sorry, not 9 lakhs. 10,50,000, correct? 10,50,000 is my EBIT. Hey, are you all understanding this thing? Not understanding that, tell me, I will repeat again. How you can do this? You can do this even in this way, okay? PAT is nothing but 75 lakhs into 6.5 percentage. It is 4,87,500. From PAT you have to add taxes, okay? From PAT you have to add taxes. Taxes will be 9,75,000 because taxes at the rate 50% you have to add back. Now you will ask how you are adding 50% is 9,75,000. Hey, sorry pa, how tax is 9,75,000? It is 4,87,500, right? 4,87,500. Okay, 4,87,500 into 1 minus t. Okay, 4,87,000 into 1 minus t. You will get earnings before tax. Okay, profit before tax you will get. It is nothing but 9,75,000. This is EBT. If you add interest, you will get EBIT. Okay, it is 75,000. So you will get 10,50,000. Any method you do, you will get the same answer. Okay. Okay. So now you got your EBIT. Now you got your EBIT as 10,52,000. Okay. Now what you want to find? Operating expenses. You already know gross profit minus operating expenses is equal to operating profit, right? Which means gross profit minus operating expenses is equal to EBIT. What is gross profit? Already calculated, right? 52,50,000. Okay, 52,50,000. 52,50,000 minus operating expenses. What is my EBIT? 10,50,000. So if I want to find operating expenses is nothing but 52,50,000 minus 10,50,000. Therefore, operating expenses is equal to 42 lakhs. Online students, you understood how I calculated operating expenses. This is the first requirement. If you see that, if you see the textbook now, they have given in table way, same thing they have given, but they have given in table way. Like I have just formulated it and did it in a structural format way. Okay, structural formula way. Whatever comfortable you solve it, whatever comfortable you solve it, but back of the mind you should know what you're doing. Clear? Operating, any doubt you're having? Okay, no doubt. See, if anyone is having no doubt, now there are only two reasons. One is you know everything. Second is I am teaching crystal clear. So only two reasons are possible, or the third reason you are shy to ask. Okay, I always remove this third reason. There are only two reasons. So which reason is this? First reason or second reason? Second reason. Online students, which reason? You know everything or everything is crystal clear now?
Second one. Second one.
Okay, bro. Seri, okay. Operating expenses completed. Okay, operating expenses completed. First thing is completed. Now we are going into second thing. It is balance sheet. Okay, it is balance sheet. So always first write the balance sheet. Okay, always first write the balance sheet whatever is given. Balance sheet, equity share capital, reserves and surplus, 15% debentures, okay, payables and bank OD. Okay, bank OD. Now here what is there? Fixed asset, current asset, but always see in exam it will be given like this: current asset, stock, receivables and cash. Now see, they will be given, so you will be thinking current asset as a line item. Current asset is not a line item, it is the heading. Okay, current asset la these three things will come: stock, receivable and cash. Okay, stock, receivable and cash. Because once you see this now, you will think that current asset is one line item and you will fall into this trap. So never fall into this. Current asset is nothing, it is a line item. Under current asset you have stock, receivable and cash. Okay, under current asset you have stock, receivables and cash. So fixed asset and current assets. Okay, now fill the values which are given. Payables you already know. Okay, payables you already know. So what is payables? 2,50,000. What is bank OD? 1,50,000. Receivable is also given 2 lakhs. Okay, receivable is given as 2 lakhs. You can also find out 15% debentures. Interest you know, rate also you know. Okay, okay. So first is 15% debentures. Okay, 15% debentures is equal to interest divided by KD. What sir? Cost of capital inge kuda vanducha. 15% debentures is equal to interest divided by KD. So don't put I into 1 minus T. Don't confuse yourself. Okay, this is also after tax. Sorry, this is also before tax. So this should also be before tax. So what is my 15% debentures is equal to what is my interest? 75,000 divided by 15%. This is also before tax cash flow. This is also before tax cash flow. That is why I am taking. Otherwise you will be thinking I into 1 minus T. Then this KD also I should do 1 minus T. Okay, what is 75,000 divided by 15%? 5 lakhs. See, now if you get confused why I am not doing I into 1 minus T is because I also didn't put cash, I also didn't put tax here. What is my tax percentage? 50%. Okay, if I want to do I into 1 minus T divided by this KD net process is what we are finding, correct? If I want to do this now, I have to do this 75,000 will become divided by 2. What is 75,000 divided by 2? 37,500. This KD also I have to do divided by 2. This 15% is before tax. So this also I have to do after tax. So this will become 7.5%. What is the answer? 5 lakhs. Don't confuse yourself, just for your information I am giving you. Okay, this KD also you don't use, interest percentage you used. Done. Okay, now you got working note number 1 5 lakhs. Okay, working note number 1 5 lakhs. Working note number 1 5 lakhs. Now with this is the total. Okay, with this, now let's go. What are all the values you are having now? Now see, you are having cost of goods sold. Let's find out inventory first, because inventory is based on cost of goods sold. I already told you, any turnover formula, turnover divided by that factor. Okay, turnover divided by that variable. So if it is fixed asset turnover, then turnover divided by fixed asset. If it is inventory turnover, then turnover divided by inventory. Either turnover or cost of goods sold. Okay. Inventory turnover ratio. Inventory turnover ratio is equal to evlo 12. What is inventory turnover ratio? Cost of goods sold divided by inventory is equal to 12. What is cost of goods sold? 22,50,000. Clear? 22,50,000 divided by inventory is equal to 12. Therefore, inventory is equal to 22,50,000 divided by 12, which is nothing but, how much is inventory? 1,87,500. Okay, 1,87,500. So working note number 2 inventory. Working note number 2 inventory. 1,87,500. Okay, 1,87,500. You all know net worth means equity shareholder funds, correct? Sorry. No, only equity share capital. Okay. Yeah. Equity share preference are also treated as outside. Okay. Preference are also 1 minute. Pa बोलो पा ना मम्मी पढ़ाई अंगे પછી ફોન કરો તો કાકા third one. Okay, third one, let's use, see I already used sales. Okay, now let's come one by one. Return on net worth. So return on net worth is nothing but PAT divided by net worth. Okay, PAT divided by net worth is equal to 25%. Okay, PAT divided by net worth is equal to 25%. Net worth is nothing but equity shareholders funds. Okay, net worth is nothing but equity shareholder funds. You can also calculate total assets divided by outside liability, but usually it is shareholders funds. So what is PAT? PAT you already know, right? What is PAT? 4,87,500 is the PAT. Net worth is nothing but equity share capital plus reserves and surplus. Okay, reserves and surplus is equal to 25%. Therefore, equity share capital plus reserves and surplus is equal to 4,87,500 divided by 25% is equal to how much? 19,50,000. Okay, equity share capital plus reserves and surplus is 19,50,000. Clear? Now, if you see here, share capital to reserves ratio is 6:4. So this 19,50,000 is bifurcated into ratio 6:4. Clear? The share capital to reserve ratio is 6:4, which means this 19,50,000 is bifurcated into equity share capital and reserves and surplus in the ratio 6:4, which means 6/10. Okay, 19,50,000 6:4, which means into 6 divided by 10. So this is 19,50,000 into 4 divided by 10, correct? Into 6 divided by 10 into 4 divided by 10. So what is my equity share capital? 11,70,000. What is my reserves and surplus? 7,80,000. Hey, online students, are you all understanding? Okay, if you have any doubt, please ask me, because you all are sitting very far away from me, so I'm not able to see your expressions. So if you have any doubt, just tell me or you just respond, so I will get to know that okay, you guys are also understanding. So now you got equity share capital also, now you got reserves and surplus also. Okay, so working note number 3. 1 minute. Working note number 3, you got equity share capital also, and then you got reserves and surplus also. Okay, so now tell me what is the total then, because everything you got it. 28,50,000. So total liability will also be 28,50,000. Okay, total liability will also be 28,50,000.
total assets.
Total assets, sorry. Okay. So working note number 3, right? Working note number 3. Working note number 3. Equity share capital is 11 lakh 70,000. Reserves and surplus is 7 lakh 80,000. This is 28 lakh 50,000 and this is again 28 lakh 50,000. See, you know stock, you know receivables, you know cash. You know stock, receivables, you know cash. Let's do current ratio, current asset by current liabilities, because current liability you know, current asset like 3 values are there, 2 values you know. So balance and figure you can continue. Correct. Working note number 4. Current ratio. What is current ratio, pa? Is equal to 2.5. So current asset divided by current liability is equal to 2.5. Okay, current asset divided by current liability is equal to 2.5. What is current asset? What is current assets? Is equal to this accounts receivable plus inventory plus cash. What is current liability? Trade payables and bank OD. Okay, bank OD. See, many people, this is one common mistake, they will miss bank OD. Why? Because in the question term loan is given, but above bank OD is given. So you just have to change that bank OD. Okay, in value bank OD is given, so you have to change it to bank OD. Trade payables plus bank OD is equal to 2.5. Okay, 2.5. What is average receivables? Average receivables plus inventory is equal to 3,87,500. Correct? 3,87,500 plus cash divided by, if you add bank OD and payables, you will get 4 lakhs is equal to 2.5. Now cash is equal to 4 lakh into 2.5 minus 3,87,400. Therefore cash is equal to 6,12,500. So working note number 5. Working note number 4. Cash is equal to 6,12,500. Now everything you have, what is remaining? Fixed assets. Fixed asset is always like remaining thing. Okay, in many questions, okay, almost all the questions fixed asset is like the remaining thing, or if total you know fixed asset turnover ratio they will give you. So let's put cash as 6,12,500. Working note 4. Working note 4, cash is equal to 6,12,500. Now working note number 5, fixed assets, what is the amount? 18,50,000. Okay, 18,50,000. Clear? Put a working note, okay, put a working note. Total assets is equal to current asset plus fixed asset. Current assets is equal to this much amount, so fixed asset is the balancing figure. Okay, put a working note and then you clear. Okay, second question clear. Have you enjoyed these 2 questions? Because ratios questions are like this only. Okay, nothing great is there in ratios, only logic and approach is what you have to follow. Online students, ratios understood. We are actually closing ratios now. Or you have any doubt? Have any doubt in ratio? Let me address. Any doubts in ratios? Bank OD is current liability. Term loan is different. Okay, term loan is the wrong word used. It is a mistake, typing mistake. Sorry, it is a typing mistake. It is a bank OD only, because in the balance sheet they are giving bank term loan, but in the question they are giving bank OD. So actually it should be bank OD, not bank term loan. Term loan is a long term debt, OD is a current liability. Huge distinction is there. No doubts? So can we just take 45 minutes break? Yeah, 45 minutes break is okay. sorry, if bank term loan is also given, then bank term loan becomes a long term debt. Yeah. Let's solve question number 3 and see how it goes. Okay. Capital structure of RV Limited is as on 31st March and its balance sheet. We have equity share capital, preference share capital, retained earnings, and 13% debentures. This is 20 lakhs. Okay. 13% debentures is 20 lakhs. Market price of the equity is 50 per share. Expected dividend on equity share is 3 per share. Dividend per share is expected to grow at the rate of 8%. Preference shares are redeemable after 8 years and current market price is 80 per share. Debentures are redeemable after 5 years and currently selling at 90 per debenture. Tax rate is 35%. Calculate weighted average cost of capital using book value weights and market value weights. Okay. Typical problem. See how much marks is this? 10 mark problem. It is very simple problem. Do you find any difficulty here? No difficulty, correct? See, nothing. We just have to find KE, KP, KD, and then using book value and market value weights, you have to find out the weighted average cost of capital. Simple as that. But here also tough problems are possible. But first, to pick up, we'll always take easiest one. Okay. 1 minute. Let's do cost of equity first. Always write first cost of equity. Not always like here because equity share is given. So cost of equity, KE. Which formula you have to use? If you see, we have expected dividend and we have growth rate. So dividend growth model. So D1 divided by PO plus G. Again, whenever you are writing the problem, in the exam you write like this, where D1 is equal to expected dividend. Okay, expected dividend is equal to how much? 3 rupees per share, correct? P0 is equal to, okay, market price per share. Market price per share. How much is market price per share? 50. G is equal to growth rate. Okay, G is equal to growth rate is equal to 8%. In exam you write like this. For the first time I am writing, next time I will directly solve. Okay, in exam you write like this, otherwise you won't get full marks. Okay, 2 mark. If you find cost of equity, it is 2 mark. Preference dividend 2 mark. Debentures, this 3 marks, like this. So cost of equity is equal to D1 is 3. Now you all will think, why not D0? Because directly they have given expected dividend on equity shares. If you read the question, it is not current dividend, it is expected dividend. So expected dividend means D1. Clear? Don't do D0 into 1 plus G. It is D1. So 3 divided by market price share is for 50 plus 0.08. Okay, so what is the answer? 3 by 50 plus 0.08. Answer is K is equal to 14%. K is equal to 14%. Clear? Calculation mistakes, huh? Are you getting different answer? Second one, cost of preference share capital. It is nothing but KP. If you see, preference are redeemable. Okay, preference are redeemable. So just write KP is equal to, what is the formula? Preference dividend divided by RV plus NP the whole divided by 2 plus RV minus NP the whole divided by N. Okay, the whole divided by N. If we see preference dividend, see, cost can be found in 2 ways. First, you can take everything per share or you can take everything in totality. Okay, you can either take 100 into 10% per preference share. So 10 rupee preference dividend per preference share. What is redemption value? If nothing is given, face value is assumed. Okay, so redemption value is 100 rupees. Okay, what is net proceeds? Net proceeds is 80 rupees. Net proceeds or market price, it is 80 rupees divided by 2. Okay, then plus RV minus NP. What is RV? 100 minus 80 divided by what is N? It is 8. Okay, so this is preference dividend. Okay, clear? So once you got this, okay, 10 divided by 100 plus 80 divided by 2 plus 100 minus 80 divided by how many years? 8 years. So come on, tell me what is what is preference, what is KP? 13.89 percentage. Clear? Next one, cost of debentures. Okay, third one, cost of debentures. KD. Okay, KD is equal to I into 1 minus T the whole divided by RV plus NP divided by 2 plus RV minus NP divided by N. Okay, what is interest? If you see 13% debentures of 100 rupees each, so 13 rupees is the interest into 1 minus what is T? T is 0.35. Okay, plus redemption value, if nothing is given, no redemption detail is given, it is treated as face value. So 100. Okay, 100. What is the market price of debenture? The debenture, it is 90. So 100 plus 90 divided by 2, 100 minus 90 divided by 5 years. Clear? What is cost of debt? 12 point. Are you sure? 1 minute. हाँ हाँ. Correct. What is the mistake you're doing, Pa? Printing mistake, huh? Yeah,
11%.
11%. Yeah. Not printing mistake, Pa, your mistake. Exam le answer ತಪ್ಪ ಇಲ್ಲದೆ question ತಪ್ಪು. So KD is equal to 10%. Okay. See, if you see cost of retained earnings will be equal to this KE only because no other information is given. So no need to find cost of retained earnings, it will be KE only. Okay, it will be KE only. Now weighted average cost of capital. Already said you, whenever weighted average cost of capital come, a table you have to draw. What will be the table? Source, amount, weight, cost, and weighted cost. So equity share capital, reserves and surplus, debentures, preference share capital. Okay, if it is book value weight, directly write whatever is given in the book. Okay, 25 lakh, I mean whatever is given in the balance sheet, 5 lakh, 5 lakh, and then 20 lakh. So what is my total? 20, 30, 45 lakhs. Okay, 45 lakhs. Right, weight. What is equity share capital? Equity share capital is 0.14. Okay, 0.14. So this will also be 0.14. Debentures is 0.11. Preference share capital is 0.13. Yeah, okay. Preference is, yeah, debentures is 20 lakhs. Okay, debentures is okay, pa. Sorry. So 25 plus 5 plus 20 plus 5 is equal to 50 lakhs. Correct? Five, okay, 25, 30, yeah, 55 lakhs. Okay, 55 lakhs. You have all the cost, find out the weighted cost. Okay, what is weighted cost? Book value method. This should be very speed. Okay, this you should do very speed. Calculate weight into cost, weighted cost, and find out the WACC. Somewhere you have to do 0.01. You just put 0.46 because this total should always be 1. Okay.
Sir, may I know the question number, sir?
The question number is 3. Book value proportion, what we are doing. We calculated all the individual costs. Cost of equity, cost of preference share, cost of debentures. Why so much time, pa? Yeah, 12.89 percentage. Then directly go to, now one more thing, always note one more thing. Whenever book value and market value is asked, when there is no difference between equity share capital and reserves and surplus, always write here equity value. Okay, always write here equity value. If equity, if KP and KR, if KE and KR are different, only then you bifurcate into the ratio of book value. Equity share capital and reserves and surplus, I asked you to put in the ratio of the book value weights, correct? When you should put in the book value weights? When KE and KR are different. Even if you do, you will get the same answer, but when KE and KR are different, then you do it. If both are same, then it is no sense of bifurcating it, correct? It is no sense in bifurcating it. So what is the market value of share? 50 per share. How many shares are there? How many shares are there? 25 lakh divided by 10, it is 2,50,000 shares. So same answer you will get. Okay, 1 crore, waste of time. Yeah, 1 crore 25 lakhs. Okay, equity value is 1 crore 25 lakh, which means equity and reserves and surplus. Okay, then debentures. The market price of debenture is, what is the market price of debenture? 90 rupees. How many debentures we are having? 5 lakh divided by 100. 5 lakh divided by 100 is 5,000. So it is 4,50,000. It is 4,50,000. Then preference share capital. What is the value of preference share capital? 80. How many preference shares you are having? Oh, no, debentures 20 lakh divided by 100 into 90. It will become 18 lakhs. Are you all doing with me? Then why you are not finding my mistakes? Illa sir panna correct ah da irukom. You having that impression? What is preference share? 84 lakhs. Very good. Okay. 4 lakh. Now the total value is 1 crore 25. Okay, 1 crore 25 plus 18 lakhs. It will become 1 crore 47 lakhs. Correct? Now please find out weight, cost and weighted cost. Find out weighted cost. You will get WACC. What is the cost of equity? Cost of equity is 0.14. Cost of debenture is 0.11. Cost of preference share is 0.1389. Now tell me the WACC. Tell me the WACC for market value weights. These calculations you should be very quick. Okay, these calculations you should be very quick. You're struggling, huh? Any point? Where? Okay, you're not able to find out weights, huh? See, how to calculate weight is nothing but percentage. Understand, weight is nothing but percentage. Out of 55 lakhs, how much percentage is 25 lakhs? So 25 lakhs divided by 55 lakhs. you will get the weight 0.45. Same way 5 lakh divided by 55 lakhs, you will get 0.09. Same way 20 lakh divided by 53 lakhs, you will get 0.36. Same way 5 lakh divided by 55 lakh, you will get 0.09. Multiplying weight and cost, you are not getting the answer. See whether cost you are put correctly or not. Equity, share capital and reserves both 0.14. Both are 0.14. Debentures is it 0.11. 0.11. Preference share capital 0.1389. Now you are multiplying and not getting. Yeah, right. Write that. You will get 0.1289 and then you have to do into 100.
15.6.
What is the answer? 15. It is wrong. It is wrong. 15 will not come.
13.6.
Yeah, 13.63 percentage. You all are doing, huh? Got the answer? Very good. Yeah, that's the correct answer. 13.63%. See, this is a 10-mark problem. Just imagine if you get this problem now, how easy it would be to score marks. Are you getting, Deepika? Yeah. What is the error? Calculation of debt. What is the debt percentage? 11%, right? So see, 0.09 into 0.14. Correct. 0.1291. You're getting right. Book. Market value is doubt, huh? Okay. Okay. Clear. Still understood how to do it, right? No doubt, right? What was the error? Calculation mistake and all are not expected at this level. Calculation is not a mistake, it is a blunder. Okay, question number 4. Okay. Can we start question number 4? Question number 4 is also a similar problem. You have to find WACC, but here little bit calculation differs. So some extra information is there. Let's read. Navya Limited wishes to raise additional capital of 10 lakh. So 10 lakh she wants to raise. Okay, it has 3 lakh in form of retained earnings. So reserves and surplus is equal to 3 lakh rupees, which is available for investment purposes. The following are the further details. Her debt and equity mix should be 40 and 60%. Okay, debt to equity ratio should be 40 to 60%, which means out of these 10 lakhs, just see capital. Okay, capital out of these, I mean the investment, out of these 10 lakhs, what should be the equity and what should be the debt? Equity, debt to equity, debt should be 6 lakhs. Oh sorry, debt should be 4 lakhs. Okay, debt should be 40% and equity should be 60%. So this should be 6 lakhs. Clear? Clear? Now from this 6 lakhs, it is already given that 3 lakh is in retained earnings. Okay, 3 lakh is in retained earnings, which is reserves and surplus, and the remaining 3 lakhs is equity share capital. Clear? So now you have 3 lakh of retained earnings, 3 lakh of equity share capital, 4 lakh of debt. This will be the pattern. So this is nothing but to determine the pattern of raising additional finance. So this is the pattern. Doubt? Huh? Yes. Yeah. See, then how your debt equity ratio will become 40:60? Your debt equity ratio should be 40:60. They want the debt equity mix should be 40:60. Clear? See, if you put 7 lakh and then you do 60:40, then your total debt equity ratio will change. Clear? This is one mistake that you have to avoid. That is the reason I've chosen this question. Clear? Online students, are you clear what I did?
Yes, sir.
Okay. With this, we can maintain our debt equity ratio of 60:40. Okay, I mean debt equity 40/60, 4:6, 2:3. Okay, done. Now, this is first one. First one is completed. Determine the pattern for raising the finance. This will be the pattern of raising finance. Okay. Equity will be 6 lakh, debt will be 4 lakh, equity will again be bifurcated, reserves and surplus 3 lakh, equity share capital 3 lakhs. So pattern for raising additional finances, okay, you just have to write equity share capital, retained earnings and debts. How much is equity share capital? 3 lakhs. 3 lakhs. How much is retained earnings? 3 lakhs. How much is debt? 4 lakhs. Okay. So this will be the 10 lakhs investment. Okay, additional finance. So this will be the pattern of raising the funds. Okay. See, these things you will not be able to think in examination. These things you have to think now. So if examination comes now, you just have to apply. Otherwise, this is a very confusing point. It looks easy, but it's a very confusing point. Okay. Now this is done. Now calculate cost of debt and cost of equity. Let's find out cost of debt. Okay, read the question. Cost of debt, how much I have to raise debt? 4 lakh I have to raise debt. Up to 1,80,000 my interest is 10%. Up to 1,80,000 my interest is 8%. Beyond 1,80,000 my interest is 16%. Okay, up to 1,80,000 it is 10%. Beyond 1,80,000 it is 16%. What I want to find out? I want to find out the cost of debt. Okay, cost of debt. Cost of debt. What is the formula for cost of debt? I into 1 minus t divided by net proceeds. Clear? Now what is my interest? First 1,80,000, how much interest? 10% interest. Then how much I have to get again? 2,20,000 I have to gain. I have to take again, correct? How 2,20,000? Because 1,80,000 already taken, I have to take 4 lakh as debt, correct? So this 2,20,000 debt I will take over and above 1,80,000. So 1,80,000, this how much percentage? 16%. Okay, so this will be my interest. This will be my interest. With this I have to do 1 minus t. What is t? 50%. Okay, 50%, which is 0.5. Okay, 50%, which is into 0.5. Okay, into 0.5 divided by net proceeds. How much loan I am taking? 4 lakh is the loan that I am taking. Tell me what is KD? 6.65%. Online students, you understood? You all will be thinking I into 1 minus t divided by NP. Then why I formula is big? It is because we have two interest rates on slab rate basis. Okay, clear, online students?
Yes, sir. Yes, sir.
Very good. Okay, cost of debt completed. Now let's go to cost of equity. Okay, cost of equity. You already know many formulas for equity is there, but which formula to use you have to choose from the question. Okay, now let's read the question. EPS is given, dividend payout, so 2 rupee dividend is given, and expected growth rate in dividend is given. See, this is expected growth rate in dividend, not earnings. If expected growth rate in earnings is given, then we would have used earnings growth approach. Expected growth rate in dividend is given, so we have to use dividend growth model, correct? So G is equal to 10% dividend payout. So this is not D1, this is D0, correct? This is D0. So D0 is equal to 2, G is equal to 10%. Okay, market price per share. This is P0. Okay, P0 is equal to 44. So let's do, what is the formula for KE? D1 divided by P0 plus G. Clear? Now here D0 is given. So you have to do D0 into 1 plus G divided by P0 plus G. What is D0? What is dividend? What is current dividend? 2. Okay, what is G? 10%. So 1.1. So this is my D1. This is dividend payout, where ratio is given. Dividend payout. Yeah, it is the amount only. Ratio is not given, no? If ratio is given, then okay, even though how ratio is 2, what is 2? It should be some percentage, right? Yeah, it should be some percentage, right? How 2? 2 rupee is the dividend payout. Okay, don't confuse. Dividend payout 2, which means dividend payout is 2. So D0 is 2. 2 into 1.1. What is P0? P0 is 44. What is growth rate? 0.1. Tell me what is KE? What is KE?
15%.
K is equal to 15%. How 20 you are getting, ma? 2 into 1.1 is equal to 2.2 divided by 44, you are getting 0.05. Okay, plus 0.1, you are getting 0.15 is into 100. What was the error? You took earnings instead of dividend. This is not a mistake, this is ignorance. Okay, done. Even though you take earnings now, it should be 30%. How you got 20? Earnings is 4, right? 4 into 1.1 divided by 44 plus 0.1. Yeah, okay. Anyhow, 15% is cost of equity. Okay, 15% is cost of equity and cost of retained earnings. Okay, and cost of retained earnings. Both are same because no other information is given. Okay, done. So third requirement also done. What is the fourth requirement? WACC. Okay, source amount WACC should be, okay, WACC should be as per book value because nothing else is given. Okay, source amount, weight, cost, weighted cost. Okay, what is the source? Equity share capital, retained earnings, debentures. How much is equity share capital? 3 lakhs. How much is retained earnings? 3 lakhs. How much is debentures? 4 lakhs. So this is 10 lakhs. Okay, 0.3, 0.3, 0.4. What is my retained earnings? 0.15, 0.15, and what is my debentures? 6.65. So it is 0.0665. You can also put in percentages. Okay, not an issue. If you put percentage here, your answer will directly come in percentage. You can also put percentage here. 15%, 15%, 6.65%. Okay, so you will get directly answer in percentage. Any method you can use. Now what is the answer? What is your WACC? You guys are solving, right? Or just seeing? Shreya, are you solving or just seeing? Done. What is the doubt? Okay, okay. What is WACC? 11.66%. Correct. Okay, 11.66%. Completed question number 4. See, question number 3 was little different. Question number 4 was little bit different. Okay, let's come to question number 5. I'm just giving you the variety of problems that are there. Okay, variety of problems that are there. Let's do question number 5. Let's do question number 5. Now, under question number 5, again you will see some other issues. Okay, again you will see some other issue. This flotation cost issue, this equity share capital and retained earning different issue. All this issue will come in question number 5. Question number 5, the advanced question possible. Shall we read the question? Now determine the cost of capital of Best Luck Limited using book value and market value. See, I won't find out WACC here. Okay, I won't find out WACC here. We will just find out the individual cost. Once you know individual cost, you already have the book value and market value. You can find out the weights. Okay, so to save time, we will only find the individual. Okay, we will find KE, we will find KP, and we will find KD, and we will find KR, and then we will close it with this question. WACC homework. Okay. Now equity shares, retained earnings, preference shares, debentures. So we have to find cost of all these 4. Okay, cost of all these 4 items you have to find out. Now let's see. Okay, pa. Read the question. Equity shares are quoted at 130 per share. So what is this? The market price. It is quoted as 130, so this is the market price. And a new issue is priced at 125 per share. Okay, so 2 prices are given. Right now it is trading in the market as 130 rupees. But if you were to issue new shares, you will get 125 rupees. I already said you why usually issue price will be less than market price. Correct? IPOs are usually lesser than market price. I already told you. And shares will be fully served. Flotation cost will be 5 rupee per share. Okay, 5 rupee per share. Clear? What is the formula for equity? What is the formula for equity that you will use? Because dividend is given. During the previous 5 years, dividend has steadily increased from 10.6 to 14.19. Okay, 10.16 to 14.19, the dividend has grown, which means with this you have to find the growth rate. Okay, dividend at the end of the current year, is expected to be 15 per share. So what is this? This is D1, because end of the current year. Is expected to be 15 per share. It is D1. Clear? Are you guys with me? Yes, sir. Okay, pa. Now let us find cost of equity. Okay, cost of equity. Tired, huh? No, right? Enjoying. Okay. The formula for KE is equal to D1 divided by P0 plus G. Okay, we don't have anything. Okay, first you have to find out P0. Okay, I already said you P0 should be reduced from flotation cost also. If it is an equity, because equity we are issuing, correct? Equity is something that we are issuing, so P0 will be adjusted by flotation cost also. Clear? Now, what will be P0? Okay, what will be P0? Will that be 130 rupees per share or 125 rupees per share is the question. I already said you we have to take the cash flow, so whatever is the issue price is what we have to take it. Net proceeds, correct? So what is net proceeds? Issue price. Okay, issue price. What is issue price? 125 per share we have to take. Okay, so P0 minus flotation cost is equal to 125 minus 5 rupees is equal to 120 rupees. Clear? Till this you are clear? Yeah, if market price is given, you have to consider the net proceeds. That is what is the issue of this question. Okay, that is what is the issue of this question. P0 is equal to issue price is equal to 125. Then you also have to reduce flotation cost, correct? If you are issuing equity, then you will also incur flotation cost. So that will also be reduced from the price, correct? You will not get 125 rupees. 5 rupees will go as flotation cost. So actually you are getting only 120 rupees. This is nothing but net proceeds, okay? 120 rupees you are getting. Clear? Now we have to find out the growth rate, okay? We have to find out the growth rate. Now what it is telling, first year how much I got the dividend? 10.60. Okay, first year I got a dividend of 10.10. Okay, during the previous 5 years I received dividend steadily. So 0th year I got dividend of 10.16. 5th year my dividend has been increased to 14.19. okay, steadily it is growing and it has been increased to 14.19. okay, so what we have to do, just present value future value formula. My present value into 1 plus growth rate to the power n is equal to future value, correct? Are you all able to understand this formula? Understand this formula. What is this? Present value into growth rate into 1 plus g to the power n is equal to future value. Understood? Compounding part, discounting the future value divided by 1 plus I to the power n is equal to present value. Present value into 1 plus g to the power n is equal to future value. Online students, are you all able to understand this formula?
Yes, sir.
Okay. So presently what is the dividend that I am getting? 10.6. okay, 10.6 is the dividend that I am getting. 1 plus g I don't know. For how many years? 5 years. Future value, I am having a future of value 14.19. okay, so in 5 years it is something like, in 5 years my 10.6 rupees has become 14.19 rupees. You have to see this way, or because it has been increasing, correct? 1 minute, am I doing correct? Yeah, dividend has steadily increased from 10.6 to 14.19. so at what rate it is growing? Okay, at what rate it is growing is what we are finding out. Clear? Now 1 plus g to the power 5 is equal to 14.19 divided by, okay, 14.19 divided by 10.6. You will get 1.33, okay, 87. Okay. Now find out 1 plus g is equal to 5th root of 1.3387. Please find out what is the growth rate. 6% is the growth rate, correct? So g is equal to 6%. okay, g is equal to 6%. Everything you got? G is equal to 6%. What is D1? What is D1? D1 is already given in the question. D1 is 15. Okay, expected per share is 15. Online students understanding how I am finding cost of equity? Online students, please reply.
Yes, sir.
Okay, pa. Found the growth rate. Let's find out KE. Okay, let's find out KE. Have all the values correct. So D1 divided by P0 minus flotation cost plus G. What is D1? 15. What is P0? 125. What is flotation cost? 5. What is growth rate? 0.06. So what is my KE? Come on, what is my KE? %18.5%. Okay, 18.5%. 15 divided by 120, correct, plus 0.06. 200 is equal to 18.5%. See, this is one issue. In this question, we have few more issues. Okay, this is one issue. Second issue, we always under cost of retained earnings, floating cost will not come, correct? Floating cost will not come. So here cost of equity is not equal to cost of retained earnings. Cost of equity is not equal to cost of retained earnings. So what is cost of retained earnings? If flotation, see, into one, but flotation cost is not in percentage, right? So how we will do? Just directly do again D1 divided by P0. Just don't do minus flotation cost, okay? Plus G. Are you all understanding? 15 divided by just 125 plus 0.06. What is the answer? I think this is 18%. See, if flotation cost is in percentage, you can directly put KE into 1 minus flotation cost. But flotation cost is in rupees. So if it is in rupees, now P0 you don't adjust itself, thereby reducing the cost from 18.5 to 18%. Are you all understanding? Online students, you understood this point? See, if I am telling my flotation cost is 10%, then what I will do? I will directly do 18.5% minus 10%, okay, into 1 minus t, so I will get some amount. But here flotation cost is not in percentage, flotation cost is in rupees, okay, is in rupees. Or you find out percentage of flotation cost. What is percentage of flotation cost? 5 divided by 125 into 100, okay, it is 4%. So directly do 18.5 minus 4%. Okay, no, 1 minute. %4 of what? See, you don't have the actual issue price. 120, okay, 5 divided by 120. 4.167. 1 minute. 4.167. See, if it is given in rupees absolute values now, you don't have to consider flotation cost in the formula. Just directly put it in the formula because that is the approximate value. Okay. Are you clear? These are small issues, you will not be able to find out in examinations. Only if you do the problems, you will be able to tackle these issues. Now cost of retained earnings is completed. Okay. Now let's come to one more issue. Yeah. No, that is for debentures. Debentures flotation cost is 2%. I know that is given for debentures. Whenever percentage is given, only then you will find, okay. Whenever percentage is given, only then you will be able to find when flotation cost. If flotation cost is given in rupee, then why you have to find the percentage? You already have the flotation cost, right? Now let us do cost of debentures. Okay, cost of debentures. This is also one interesting. Okay, cost of debentures. Read, the company proposes to issue a 15% debenture, but the yield on debenture similar maturity and risk class is 16%. Flotation cost is 2%. What is KD? If you are in exam, you all will be stuck. What is this? I want to issue 15% debentures. Okay, I want to issue 15% debentures, but the yield on the debenture is 16%. Okay, yield on the debenture is 16% and flotation cost is 2%. So what is KD? You all know formula of KD is I into 1 minus T divided by net proceeds into 100. Correct? I into 1 minus T divided by net proceeds into 100. Here I you will find out, just assume face value is equal to 100 rupees. I you will find out, I is 15. Okay, 15 into 1 minus T will become 15 into 1 minus 0.35 divided by what is the net proceeds. You don't have any net proceeds, correct? Instead what they have given, instead of net proceeds, what they have given, the yield on similar debenture is 16%. Okay, the yield on similar debenture is 16%. So what is your what is the cost of debt? So how will you find out? Are you all understanding, or are you having doubt? No idea. Online students, are you all understanding this? Hello. Sorry. Okay, see, company wanted to issue 11-year 15% debentures. Okay, 11-year 15% debentures. Just say the face value is 100 rupees. So 15 rupees is the interest. Okay, 15 rupees is the interest. That is very clear. 15 rupees is the interest. But net proceeds you don't have. Instead of net proceeds, what they are telling is this 15% debentures is right now is having a yield of 16%. I already said you the return and price are inversely proportionate, correct? If 15% debenture is actually having a yield of 16%, which means the net proceeds is not 100 rupees. The net proceeds is less than 100 rupees. So as to bring the cash to 16%. So as to bring the rate at 16%, correct? See, if for 1 to 11 years, I am giving 15 rupees as dividend. 15 rupees as dividend, okay? And okay, 15 rupees as dividend, and 11 I'm returning that 15 rupees again. I'm returning that 100 rupees again. 0th year I'm paying 100 rupees. Okay, 0th year an investor is paying 100 rupees. 1 to 11 years he is receiving 15 rupees. 11th year he is receiving back his 100 rupees. If the yield is 15%, the NPV will be 0. Yeah, the NPV 100, the price is 100, the NPV will be 0. Now what it is telling, the investor yield is 16%. The investor yield is 16%. So price will not be 100, it will be less than 100, correct? So as to become this 0. Yeah, clear? If the rate is increased, the price will decrease. The price is nothing but the present value of the future cash flows. YTM method. What is price? Present value of future cash flows, YTM method. Clear? Clear? YTM method you all know, right? Okay, pa. Now how you have to calculate this? Nothing, pa. This cash flows, you discount it to 16% to get the price. Correct? What you have to do? See, if you discount this cash flow to 15%, you will get 100 rupees definitely. You try to discount this at 15%, you will get 100 rupees. But yield is 16%, so you have to discount it by 16%. Okay, what is present value annuity factor of 15% for 11 years? Come on, quickly tell me. Present value annuity factor 15 years for 11 years. Quickly. Present value annuity factor 15 years and present value factor at the rate 15% for 11 years. present value annuity factor for 15 percentage for 11 years. What is it? 5.234.
4.3.
Are you sure? 15, 1.1.1.
4.3.
2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yeah, it is 5.234. You are correct. Okay, 5.234. 1 minute. What is present value factor of 15 percentage? Present value factor for 15 percentage 11 years. 0.215. Now this is the cash flow. What is the 15 rupees is the interest, and you will get 100 rupees in the end. Just calculate 15 into 5.234. 15 into 5.234. What is it? 78.5. 100 into 21.5. 21 point. What is the answer? Total is 100. Are you all getting this? So cash, okay, yield is nothing but the present value. Now what they are telling, yield is not 15%, yield is 16%. So you have to find out the net proceeds, correct? You have to find out this price, net proceeds. Net proceeds is not 100 rupees. They didn't directly give the net proceeds. What they gave, the yield is 16%. The yield is 16%. So how to find the net proceeds? How to find the net proceeds? Or how to find the price of the debentures? How to find price of the debentures? P0 is equal to 15 rupees actual cash flow discounted with yield. So 15 rupees into present value annuity factor of 16% for 11 years plus 100 rupees into present value factor of 16% for 11 years. Are you all getting this or confused? Table formula I want to show you. Huh? Yeah. Only then your price will get reduced, right? Online students, see what is happening. 15 rupee 1 to 11 years I am getting. Okay. 15 rupee 1 to 11 year I am getting. 11th year I am again receiving my 100 rupees back. Okay. Now what is happening? What they are telling, my yield is 16%. My yield is 16%. So if I discount this cash flow, okay, this is the actual cash flow. 15 rupees I have to pay interest, 100 rupees I have to pay back. If I discount this at 16%, okay, present value factor at the rate 16%, I will get the discounted cash flow, which is nothing but price, of the debentures. 95 rupees. Okay, it is 95 rupees. Is it exactly 95? 94.93. Okay, so it is 94.93. Online students, you got this point. Online students, you got this point. Or you are confused? Online students, please reply. See, usually you want to find out the market price of debentures in the denominator. Okay, they didn't give the market price of the debentures. Instead, what they gave, my yield is 16%. Okay, my yield is 16%. So cash flow you discount by 16%, you will get the amount. Online students, please reply, because I am scared that you will miss this point. So Vasundhara, Vijay Raghavan, Aishwarya, please reply.
Yes, sir, understood.
Understood? Clearly understood, right?
Yes, sir.
Okay, pa. Okay, done. See, you got P0. Now, okay, pa. Now, come on, concentrate. KD is equal to I into 1 minus T divided by, okay, net proceeds. Net proceeds is nothing but price. What is I? 15. 1 minus 0.35. What is net proceeds? Okay, what is the percentage? KD percentage. 10.27%. Wait. Are you missing something? Flotation cost. Okay. Flotation cost. So always, in formula itself you write minus flotation. If flotation is there now, in formula itself you write minus flotation cost. So what is flotation cost here? 2% of what? Issue price or face value? Face value. Okay, it is given. So minus 2. Clear? See, it is given. Flotation cost would be calculated on face value. Face value is 100 rupees. 100 rupees is what we are assuming. Okay, 100 rupees is the face value. So what is the flotation cost? 2 rupees is the flotation cost. Correct? 2 rupees is the flotation cost. 2% into 100 rupees face value. So 2 rupees is the flotation cost. So 15 into 1 minus 0.35 divided by 94.35. This is my net proceeds, the price of the debenture. If I were to issue the debenture, I have to pay 2 rupee flotation cost. I have to reduce flotation cost. Now what is my cost of debt? What is my cost of debt? Come on. %10.49%. Is it correct? 10.49. Okay. 9.75 divided by 92.93. Okay, into 100. Okay, 10.49%. Clear? Clear? 10.49%. 10.49%. Everything you got it right? 10.49%. See, whenever they are asking market value and book value weight, you can actually calculate together also. Okay, source, book value. Okay, book value, weight, cost, weighted cost, market value, weight, and weighted cost. Now here one more issue we are having. One more issue what we are having. Here KE is different and KR is different, correct? KE is different and see, I will just tell you. Equity share capital, retained earnings, preference share capital, debentures. Book value you will not have any problem, okay? This will be 1 crore 20 lakhs, okay? This will be 1 crore 20 lakhs, so 120 lakhs. This will be 30, this will be 36, this will be 9. So what is the total? Please do quick. 150, 186, 195. Okay, please. What is my KE? What is my KE? Okay, 18.5%. What is my RE? 18%. What is my preference share capital? Okay, till we didn't computed preference share capital. Wait. Okay, till we didn't completed preference share capital, we missed. Wait. Okay, what is KP? KP is equal to preference dividend divided by NP. Okay, preference dividend divided by NP. Is this redeemable or irredeemable? Preference share capital, 15% preference share capital with a face value of rupees 100 would realize 105 per share. So preference dividend is 15 rupees because face value of 100 divided by, it will realize me 105 rupees because life is not given, correct? So 105. What is the answer? 14.29%. Okay, so preference dividend is 14.29%. What is debenture percentage? Lot of hard work we calculated. 10.49%. Clear? Is this a good question or not? 10 marks, 10 marks. More or less? Yeah. See, 2 marks, 2 marks, 2 marks for these three, okay? Cost of equity, cost of retained earnings, cost of preference shares, and this. This you will get some 1.5 marks. Just say 1.5 marks something. So you will get 6 marks there and 2 marks for book value, 2 marks for market value, 10 marks. Okay? But don't worry, they won't ask completely. They will only ask book value. If at all they ask in exam, they will only ask market value or not book value. They will only ask market value. Here they are asking both. Okay, please tell me what is my WACC. What is my WACC for book value? Then I have to I have to explain one more issue. %61. Please. Okay, you are tell me the WACC. Because the maximum percentage here is 18.5%. Online students, are you all with me? Okay, was this problem interesting or not? Is this worth doing? 17.27%. Okay, 17.27% is the WACC. You also calculate. I want to compare. Not that I don't have trust. If two answers are correct, na, it is correct only.
17.27.
17.27. Okay, correct. Okay. You also calculate for 17.27 getting. Okay. Now see one more thing. Whenever you calculate market value weight, now what you will think? Directly put equity na, because here directly 2 crore is given. Correct. Here if you see 2 crore equity is given, because market value you can't have bifurcation. 2 crore equity given. What you will think? Sir, directly take 2 crore. So if you directly take 2 crore, but we have two different rates, right? So you cannot directly take 2 crores. Then your cost will not be correct. So you have to bifurcate this into equity, share capital and reserves. Are you all understanding? Now how to bifurcate in the book value weights, which means you have to bifurcate into weight of this equity, share capital and reserves. So 2 crores, okay, equity value, you just have to write one working note. Equity value is equal to 2 crores, okay, which is nothing but 200 lakhs, 2 crores. You have to bifurcate into equity, share capital and reserves and surplus. In what ratio? You have to bifurcate in the ratio of this 120:30, okay, 120:30, yeah, 4:1. So 200 into 120 by 150 or into 4:1 na, so 4 by 5, anything, okay, or 200 into 1 by 5. So what is the answer? 200 into 4 by 5, 160, this 40, okay, so this will become 160 and 40. 160 and 40. Why we should bifurcate? Because the rates are different, right? The costs are different. The costs are different. See, usually we didn't use to bifurcate because the cost was same. Here cost is different, the answer will not be correct. Because reserves and surplus ke where cost, equity, share capital ke different cost. But it is, we don't have any bifurcation for market value. Market value we don't have any bifurcation, so that is the reason using book value weight just for calculation purpose we are doing, okay. So this is 200, then what is this? This is 333.75 and this is 10.40, correct? Hyphen you cannot do. You cannot do market value of reserves and surplus. Always market value is for both. If I am telling my Reliance share is 180 rupees, how will you tell out of which how much is reserves and how much is equity, share capital? So market value you do not have bifurcation. Book you always have a bifurcation, okay. Now come on, what is the total? 200 plus 33.75 plus 10.4 is equal to 244.15. Please give me the WACC. Please give me the WACC. See how much issue we are discussing in this problem. Flotation cost in rupee we discussed, flotation cost in percentage we discussed, how to calculate growth we discussed, okay. Yield or debentures, how to find out the price of the debenture using yield we discussed. And then we also discussed the bifurcation of this equity, share capital, and reserves and surplus in book value weights. So now what is the WACC? My God, time is 3:30. 21.51, not possible. Maximum cost is only 18.5. How the cost can be more than the maximum cost? It should be in between, it should be around, in and around 16-17%. Please check again. Now, for this, you should have an understanding. How I told it is not correct. So, whenever you are calculating something you are getting now, always first check whether this can be a correct answer or not. Because see, maximum cost is itself 18.5. We are just doing a weighted average. How can it be more than 18.5? Online students, please do it with me. I am not doing because of laziness, but you should not choose that way. In fact, you cannot choose that way now. The only difference between you and me is that I can choose to be lazy. You cannot choose to be lazy. Online students, are you solving? Are you solving? Please reply. Okay, okay. Good. %17.48. Okay, this could be the answer. Any other answers I'm getting? What is your answer? 17? Oh, you only told that. Any other one? Any other answers? So, someone messaged me that like concepts and all I understand, but problems and all you don't do, sir, in class. So that is the reason now I think that student will be happy. Okay, sir is doing problems. I think you only, right? Okay, some other student then.
So 19.59.
19.59, Vardha. 19.59 is not possible. See, the maximum cost is itself 18.5. In 18.5, you will apply some weight. In 18, you will apply some weight. It would be less than 18. It should be less than 18. It cannot be 19%. Why I am telling it cannot be 19%? Because the maximum cost is 18.5. What we are finding is we are finding an average cost between 10 and 18. Weighted average cost. So it should be something between 10 and 18.5. What is your answer, Shreya? What is your answer? Where you have stuck? You are stuck in talking. Come on, Pa, we have to speed up. See, the simple calculation you are not able to do. Online students, any one person have not given me the answer. Weighted average cost of capital for market value. Wait, what is the answer? Where you have stuck? You just tell me where you have stuck. I'll help you out. Online students, please unmute yourself and tell me where you have stuck. I'll try to help you out. You can reply, but something you reply. Silence is what I'm scared of. Online students,
Sir, I got 14.29% after the test.
you got till 14 point.
29% cost and differential.
This 10.49 you are not understanding, huh?
10.49 also I got, sir. The last part which we are learning, that only I understood. The weighted average cost.
Okay, weighted average cost you are not able to find out. This you are not able to find out, huh?
Yes, sir. That one I understood.
Yeah, I'll tell you. See, if you have any doubt, na, please ask me, okay? How to find out weight? Okay, how to find out weight? This is nothing but 120 divided by 195. Okay, 120 divided by 195. What you will get? 0.615 you will get. Okay, this is 30 divided by 195. What you will get? 0.154 you will get. 36 divided by 195. What you will get? 0.185. Okay, 0.185. This is 9 divided by 195. What you will get? 0.046. Always keep a check that this total should be 1. Okay, always keep a total. 0.615 plus 0.154 plus 0.185 plus 0.046 should be 1. Okay, should be 1. This is one check that you have to do to keep in touch that you are doing correct. Okay, now what you have to do, weight into cost is what you have to do. Now 0.615 into, directly do 18.5. okay, don't do percentage, directly do 18.5. how much you are getting? 11.3775. okay, 0.154 into 18 you do, how much you are getting? 2.772 you are getting. okay, 0.185 into 14.29, how much you are getting? 2.64. okay, 2.6437 you are getting. okay, 0.046 into 10.49, what is you are getting? 0.48254 you are getting. okay, now just add 11.3775 plus 2.772 plus 2.6437 plus 0.4825, what you will get? 17.27 you will get, pa. 17.27 you will get. Now you are having any doubt?
No, so first I did the same process. 120 divided by 195. I got 0.6. And then later now it's a big
Sir,
number.
17.85 correct.
17.85 for market value weight, huh?
Yes, yes.
17.85. okay, let me do only, pa. 160 divided by 244.15, it is 0.655. okay, 0.6553. okay, 40 divided by 244.15. don't do any calculation mistakes here. okay, because this is purely calculation. okay, 33.75 divided by 244.15, 0.1382. okay, 10.4 divided by 244.15, 0.0426. always keep a check whether the total is becoming 0 or not. 0.6553. okay, 0.6553 plus 0.1638 plus 0.1382 plus 0.0426. I am not getting 1, somewhere I have to increase 1. okay, so what I will do, I will just do this as 0.6554. okay, somewhere rounding off, so I have to do this. Now this cost I have to multiply with this weight. okay, so 18.5 into 0.6554, what is the amount that I'm getting? 12.1249. okay, 18 into 0.1638, what is the amount that I'm getting? 2.9484. okay, now 0.1382 into how much percentage? 14.29, what I'm getting? 1.9749 I'm getting. okay, now 10.49 into 0.0426, how much I'm getting? 0.4469 I'm getting. okay, now just add 0.4469 plus 0.4469 plus 1.9749 plus 2.9484 plus 12.1249. What you are getting? 17.49 percentage, which is approximately 17.5 percentage. Okay, 17.5 percentage. Now you are getting a.
Yes, sir.
Now what was your mistake?
The third one, instead of 1382, I put wrong.
So this is a calculation mistake.
After weightage.
Yeah, this is a calculation mistake. Okay, so this is not a mistake. It is not a mistake. It is a, what it is? Calculation mistake is not a mistake. It is a blunder. As a CA student, you are not expected to do calculation mistakes, ma. Somewhere here and there you can miss, but you cannot do, calculation mistakes. But yeah, humans prone to errors, avoid mistakes, okay? How to avoid mistakes? Practice. Had you practiced some 10 weighted average cost of capital problem, today you would not be facing this much difficulty. Done?
Yes, sir.
Okay, pa. I wasted so much time here, pa. Actually, I didn't expect calculation and all I have to teach. Question number 6. That too before 15 days of exam. Question number 6. Capital structure. Okay.
நீங்க கேட்கற கேள்வி ஃபர்ஸ்ட் பதில் சொல்லணும்னு கடகடன் போடுறதுல தப்பு வந்து.
Okay. Speed and accuracy both should be balanced, pa. Okay, now what we are doing, a company earns a profit. Okay, a company earns a profit of 6 lakh rupees. Let's read the question. A company earns a profit of, you all can see the screen, right? Yeah, the company earns a profit of 6 lakh per annum. Okay, profit of 6 lakh per annum after meeting its interest liability of 1,20,000. So this is profit after interest, okay, on 12%. The tax rate is 15%. So nothing is given. So it is after interest but before taxes. Okay, so what you have to do, you have to add back the interest. Okay, something will do. The number of equity shares are 10 rupees each, are 80,000. So equity share capital is 8 lakh rupees and retained earnings is 8 lakh rupees. No, 1 minute. Retained earnings is 18 lakh rupees. The company proposes to take up an expansion scheme for which sum of 8 lakh rupees is required. So how much additional amount is required? 8 lakh rupees is required. It is anticipated that after expansion, the company will be able to achieve the same return on investment as at present. Okay, the company will be able to achieve the same return on investment as at present. The funds required for expansion can be raised through either debt at the rate of 12% or by issuing equity shares at par. Okay, so two options are there. Option 1, full equity. Option 2, full debt. Okay, but what is this? We have to find the EBIT level. Okay, because EBIT they have not given. It is anticipated the company will be able to achieve the same return on investment. So through some tricky point we have to find EBIT. Clear? Now what is this percentage? Achieve the same return on investment as present. So what they are telling is, right now what is the return on investment that I'm getting, right? The EBIT percentage, what am I getting? The same EBIT percentage I will also get after expansion. So after expansion my proposed EBIT will be different. Are you getting? First let us find the present EBIT. Okay, question number 6. I think few people already did the question, huh? So profit before tax. Okay, profit before tax. What is profit before tax? 6 lakhs. It is given in the question. You have to find out. So this is nothing but EBT, okay, EBT. If you want to find out EBIT, na, you just add back interest. 1 minute. Yeah, you just add back interest. Okay, what is interest? Okay, interest is 1,20,000. Now, what is my EBIT? 7,20,000. Okay, 7,20,000. Now I have to find out present return on investment. Okay, present return on investment. Okay, return on investment, also called as return on capital employed, because capital employed is my investment, correct? Present return on investment. Ayyo, 1 minute. Present return on investment is equal to EBIT divided by 1 minute. EBIT divided by capital employed. Okay, now EBIT I know, I have to find out the capital employed. Okay, I have to find out the capital employed. What is capital employed? Capital employed is nothing but shareholder fund plus long term debts, correct? Hello? No. Return on investment. Okay, so EBIT divided by capital employed. Now, what is my capital employed? Capital employed, equity share capital plus reserves and surplus. Okay, plus what I am having? Debentures I am having. Okay, debentures. Now, what is my equity share capital? What is my present equity share capital? 8 lakh. 8 lakh rupees is my equity share capital. 18 lakh is my retained earnings. Okay, 8 lakh is my equity share capital. 18 lakhs is my preference shares. What is my debentures? Come on, what is my debentures? 10 lakh. How 10 lakh? 1,20,000 rupees is the interest and it is 12% debentures. Okay, 1,20,000 interest with 12% debentures is there. So it will become 10 lakhs. So what is my capital employed? 18 plus 8 is equal to 26. So 36 lakhs is my capital employed. Are you all clear? Now, therefore, what is my return on investment? Return on investment is equal to EBIT. What was my EBIT amount? Okay, 7,20,000. 7,20,000 divided by 36 lakhs into 100 is equal to 20%. This is my present return on investment. Now, what they are telling is after expansion also your return on investment will be same. So I have to find out the new EBIT. I have to find out the new EBIT after expansion. How will I find out new EBIT? First, I will find out the new capital employed. So first, what is the capital employed after expansion? Okay, capital employed after expansion. Capital employed after expansion is equal to this 36 lakh will already invested. Then additionally, how much I am raising? 8 lakh I am raising. Okay, additionally 8 lakh I am raising. So what is my capital employed? 44 lakhs. Okay, 44 lakhs is my capital employed. So what will be my new EBIT or proposed EBIT? Okay, proposed EBIT or new EBIT is equal to 44 lakhs into 20%. Why? Because already they are telling they are generating the same return on investment. So what is the amount? 44 lakh into 20% is equal to 8,80,000 rupees. See, whatever problem we did in the class, always EBIT will be given. Okay, always EBIT will be given in the question. Here EBIT itself they are asking us to find. Clear? This is what is the issue. Now you will be able to easily handle. Okay, this was the only issue here. Now you all will be easily handle. Okay, EBT, EBIT, then present rate on investment. What was the capital employed? return on investment 20%, capital employed after expansion 44, then proposed EBIT is 8,80,000 rupees. Okay, 8,80,000 rupees. Now, whenever any capital structure problem, what I did, option 1, option 2, okay, option 1, option 2. Here we also have some present situation, so keep present also. If you don't want, you can even ignore this. So present situation, okay, present situation, and this is after expansion. Okay, this is after expansion. How you have to start? You have to start with EBIT. What is the present EBIT? Come on. That is after expansion. Present EBIT 7,20,000. What is my after expansion EBIT? 8,80,000. 8,80,000. Okay, this option 1 is equity and option 2 is debt. Okay, option 1 is equity, option 2 is debt. So after EBIT, what I have to do? I have to reduce interest. I already said old interest, whether they are having a, yes, we already have some debentures. So old interest and new interest. Okay, old interest and new interest. Okay, old interest and new interest. What is my old interest, pa? How much debenture I am having? It is 1,20,000. Okay, 1,20,000, 1,20,000, 1,20,000. Now new, how much I am raising? 8 lakh I am raising. 8 lakh into what percentage? 8 lakh into how much percentage? 12%. So what is 8 lakh into 12%? 8 lakh into 12% is my new interest. So 96,000 will come in debt option, correct? Because this is where I am taking debt. So this will become 96,000. Here I am not taking any debt. Okay, here I am not taking any debt. So no debt here. Okay, here no debt. Clear? So here my interest is more. So EBIT minus interest, what I will get? Earnings before taxes. Okay, earnings before taxes. 720 minus 120 is 6 lakhs. Okay, here what is 6 lakh? 64,000. Here what you will get? 7 lakh. Sorry, here it is 6 lakh 64,000. Here it is 7 lakh 60,000. Now minus tax. Tax at the rate 50%. Okay, so this is 3 lakhs. This is 3,80,000. This is 3,32,000. So what is my PAT? What is my PAT? 3,80,000, 3,32,000. Now number of shares. Okay, number of shares. Here also old and new are there, correct? Number of shares I have to divide. Okay, number of shares. Old, how many shares I was having? How many shares I am having? I am having 80,000 shares. This 80,000 shares will there. Okay, 80,000, 80,000, 80,000. Now new shares. New shares. How much share I have issued? First of all, how much amount I was required? 8 lakh was the amount I have required. What is the share? 10 rupee per share. It is issued at fire. So what is the new shares? 80,000 rupees. Okay. How I have calculated? 8 lakhs divided by 10, 80,000. So 80,000 new shares will come here. Okay. Not in debt, it will come in equity. In debt, it will be no addition of shares. Correct. So what is my total shares? So this is 80,000. Okay, this is 80,000. This is 1,60,000 and this is 80,000. Now with this, can I find out my PAT, EPS? Okay, EPS is equal to PAT divided by number of equity shares. So 3 lakh divided by 80,000. What is the answer? 3.75. Here 2.38. This 4.15. What happened? Again calculation mistake. Okay, done. Now where EPS is maximum? Debt. So therefore it is advisable to choose debt option. Clear? Because EPS is higher, okay? Because EPS is maximum. Clear? See, the only issue was faced was to find the EBIT, okay? Otherwise, this question is very easy. Clear? You all know how to solve this question, right? Yes. No, what if the debt in percentage is more? What if I am telling my debt percentage is 50%? So we have to analyze. Okay. Done. Question done. Automatically off ஆயிடுமா? Okay, question number 6 is completed. Now can we do question number 7? Okay, pa. Tired. Actually, now from past 4 or 5 days, continuously 4-5 hours, 6 hours I'm taking class. That's the reason. Okay, pa. Question number 7. Time is 4 o'clock. Let's do it. All assumptions of model are met, okay? Now this is again one interest. See, whatever question I'm choosing, is there anything that you already knew or some new points we are discussing? Both. Yeah. See, why I took these questions? These questions now I have very carefully chosen those questions which I know that you can make mistakes, or those questions where small points are there which can, tested in examinations. That is the only reason, I took these questions. Question number 7. Capital structure. See, all these questions looks very small and easy, right? Looks very small. No sir, this capital, additional funds was raised as debt, advise the company. Summa just have to draw a table only. But once you read it, you will get to know we don't have any EBIT also. When you read this question, your market value weight and book value weight, just WACC calculation. But how you struggled in equity, how you struggled in preference shares, how you struggled in debentures. Clear? In this problem also, we only the first step was tricky. Where you can make mistakes. What many people does, okay, 10 lakh is available, 3 lakh I'm already having, so 7 lakh they will do 60-40. But 7 lakh if they do 60-40, the debt equity ratio will not be satisfied. Okay, so this was one tricky point. All others are very easy, correct? Question number 3 is typical problem. Okay, question number 3 is typical problem. Okay, pa. Let's do question number 7. Now, once you read this question, you all will feel what is this question? A and B are identical in every aspect except capital structure. A Limited does not employ debts. Okay, A Limited does not employ debts, which means all equity. So it is an unlevered firm. Okay, you all are becoming matured in its capital structure, whereas B Limited employs 12% debentures amounting to 100 lakhs. So it is where your maturity gone. So this is levered firm. Okay, so B Limited is a levered firm, A Limited is an unlevered firm. Now, assuming that all assumptions of model are met, okay, all assumptions are model are met, income tax rate is 30%, EBIT is 25 lakhs, okay, EBIT is 25 lakhs, equity capitalization of A Limited, so A Limited KE is equal to 20%, okay, for A KE is equal to 20%. Calculate value of both the companies and also find out the weighted average cost of capital for both the companies. Okay, this is the question. Looks easy. Very easy question, right? Have some confidence. Say yes, very easy question. I will solve in 2 minutes. Five-mark problem only, pa. Okay. Very easy question. Okay. Please solve. Online students, actually I should not ask you to solve because every people will take different innovative mistakes, then I have to correct all those mistakes. Online students, are you all with me? Are you all enjoying the problem? See, you should enjoy the class. Okay, you should enjoy the class. Are you all enjoying? Okay. Okay, pa. Very good. Question number 7. Okay. Question number 7. Capital, what you should remember first? What you should remember? Value of the firm is equal to what? S plus D. Okay. S plus D formula you cannot use, right? Here tax is there. EBIT by KO is value of the firm. Okay, you solve. Correct. Try something, but try something. Then you strike out and do again. Okay, first try something and do. Online students, try something and give me something. Okay, if you give something, only then I will able to teach you. I'll get to know, okay, what level you are standing. Try something and tell me, sir, I did this and I got this. Okay, tell this. Value of A is 1 crore 25 lakhs, 1 crore 55 lakhs. Okay, pa. Can you find the WACC of A and B? Any other person wants to give any answer? You also getting the same answer? Both are in the same boat? Okay, pa. What about you? No idea. Online students, you know the formula, right? Any formula you know from capital structure? Yo, not a good answer. Online students, please give me something except same answer. Are you doing, online students, are you doing something?
Yes, fine.
Okay, what did you try? Can you please explain? Yeah, what you are, yeah,
I'll finish and I'll reduce.
sorry.
I'll complete and I'll reduce.
Okay. See, completion will take time. You just tell what you're thinking. I will at least tell you, no, you're thinking correct or you're thinking wrong.
Given the value of EBIT, so from that we can start.
Okay. Okay. Seripa, I'll do it. Okay. Okay, listen to me, pa. This answer is wrong. Now you are seeing, otherwise you are just talking. This answer is wrong. Okay. Now listen to me. Value of, unlevered firm and levered firm. Which is unlevered firm? A is unlevered firm, B is levered firm. Okay. A is unlevered firm, B is levered firm. Okay. K is given for whom? A. What is the K of A? 20% K is given. Okay. First of all, wherever K is given, you just try to find out. Okay. Wherever K is given, you find out. Okay. Value of the firm. Okay. Value of the firm, which is unlevered firm. Okay. It is unlevered firm. What it is? First EBIT. Okay. You will do minus interest, but interest will not be there. Then minus taxes, 1 minus T. This is equity available to equity shareholders. This is available to equity shareholders divided by KE. Okay, divided by KE. Clear? Usually you used to do EBIT into 1 minus T divided by KE. Interest is not there. Okay. So no, you will not do minus I, you will do 1 minus t divided by ke. Clear? Or you want to do me table format, EBIT less interest 0 less taxes is equal to earnings available to equity shareholders divided by capitalization rate. Now what is EBIT? EBIT is 25 lakhs, correct? 25 lakhs into 1 minus 0.3 divided by 20 percentage. What is value of unlevered firm? 87 lakh 50,000. Clear? Okay. Now I already told you value of levered firm is equal to value of unlevered firm plus debt into taxes. Clear? So value of levered firm is equal to, what is value of unlevered firm? 87 lakh 50,000 plus any details for debt is given. Yeah, debentures amounting to 100 lakhs into tax rate 30 percentage. So 100 lakh into 30 percentage. So which is 1 crore into 30 percentage you have to add, correct? So 30 lakhs you have to add. So what is 87 lakh 50,000 plus 30 lakhs? 1 crore 17 lakh 50,000. Clear? Clear? See, so simple. When questions are simple, you struggle, pa. The only thing is you should know the technique of how to start the problem, how to approach the problem. Now understood, online students? Understood? Okay. Okay, value of unlevered firm, value of levered firm. Okay. Whenever taxes are given and levered unlevered concept is given, definitely this formula is tested. Okay. Value of levered firm is equal to value of unlevered firm plus debt into taxes. Got it? 1 crore 17 lakh 50,000 you got it. Okay. 1 crore 70 lakh 50,000. Now what they are asking? Finding of the weighted average cost of capital of both the firms. Okay. So first WACC of A. WACC of A. Here WACC of A na KO. Okay. KO. KO is equal to KE only because we don't have any KD, correct? Hello. So what is WACC of A? 20 percentage. Clear? Okay. Now finding WACC of B. Okay, finding out the WACC of B. To find the WACC of B, you should know the value of equity and value of debt, correct? You should know the value of equity and value of debt. So first let us find the value of equity. What is the value of the firm? What is the value of the firm of B? Okay, value of firm is equal to 1 crore 17 lakh 50,000 minus value of debt. What is value of debt? 1 crore. 1 crore. Okay, 1 crore. So once you do that, what you get? You will get 17 lakh 50,000. This is the value of equity. Okay, this is the value of equity. Now you have value of equity, now you have value of debt, you have cost of equity, you have cost of debt, everything you are having. Okay, nothing. Now you have to find out value of equity, you found out. Now you have to find out KE. Okay, you have to find out KE. How to find out KE? Earnings available to equity shareholders, correct? So EBIT, what is EBIT? EBIT எவ்வளோப்பா? 25 lakhs. Okay, minus interest. What is interest? 12 lakhs. Okay, earnings before taxes. What is earnings before taxes? 13 lakhs. Okay, minus I have to reduce tax. What is the tax percentage? 30 percentage. What is tax now? 13 lakhs into 30 percentage. 3,90,000. Okay, what is earnings available to equity shareholders? 9,10,000. Now can I find out KE? Now can I find out KE? What is KE, pa? KE is equal to earnings available to equity shareholders divided by value of equity. divided by value of equity is equal to 9,10,000 divided by what is my value of equity? Value of equity 17,50,000. 17,50,000. So what is my answer? What is my KE? Sorry, 52% is my KE. Clear? Are you all understanding? Is it tough? Yeah, is it tough? Tough or easy? Okay, KE you got it. So now you can find out weighted average cost of capital, correct? Weighted average cost of capital, okay? Sources, okay, sources, amount, okay, weight, cost, weighted cost. Sources only equity and debt, okay? Only equity and debt. What is my value of equity? 17,50,000. What is my value of debt? 100 lakhs. So what is my total value of the firm? 1 crore 17,50,000. What is my weight here? 0.14. What is this? 0.86. So this is 0.15, okay? This is 0.15 and this is 0.85. Clear? What is my cost of equity? What is my cost of equity? 52%. What is my cost of debt? What is my? Very good. Okay. Cost of debt should be after tax. Cost of equity 52%. Cost of debt is equal to 12% into 1 minus t is equal to 12% into 1 minus evlo percentage 30, 30%. So what is cost of debt? 8.4%. Clear? So this is my cost. Online students, are you all understanding this? How I am doing this problem? This is just a simple problem. It is just that we know the formula, but while applying we are not able to find an approach how to apply this. Okay, how to apply this. So this is what is working capital 8.4. Now please tell me weighted cost and weighted average cost of capital. 14.94%. Okay, 14.94%. This is my WACC. Done. So is that an easy problem? Moderate, difficult? See, this is easy problem. Anything new we discussed? Nothing new. It is just that small intricate points we able to miss. Sorry? No. We solved this. I didn't teach you this formula. Value of unlevered firm is equal to value of value of levered firm is equal to value of unlevered firm. Okay. We are having problems. You could have seen we are having problems. But this is just a simple part. This is nothing great. All these topics we already discussed. You know how to calculate WACC. You know how to calculate cost of equity. You know how to calculate value of the firm, value of equity. Same things only. I already said you when tax impact come, what we should do. I think one full day tax impact alone I taught you. I remember. Clear? At least now you got it. It was my mistake. I didn't taught you. We didn't discuss. Okay. Completed? Okay, pa. Now, let's do. Now, see, we started with question number 1, okay? See, we started with question number 1. Question number 1, first ratios we completed, okay? This was a ratio problem, a typical ratio problem that can come in exam. Second, also ratios we discussed here. How to find out operating expenses was a new point, and then few different other ratios were that. That is the reason I took this problem, okay? Then I took into cost of capital. Cost of capital, this is a typical cost of capital problem where market value weight and book value weight is there. Then I went into question number 4. Here this determining the pattern for additional finance, and then you have to find out the cost of debt and cost of equity, all the things you have to find out, okay? Then we went into question number 5 where flotation cost impact is there. If flotation cost is given in rupees, how you should handle, okay? How to bifurcate the equity into equity, share capital, and reserves and surplus we discussed. How to find out the price of the debentures using, yield, this we discussed, okay? All these things we discussed. Then we came into this capital structure problem. Here under capital structure problem, we found out EBIT. Usually EBIT will be given and then we will analyze EPS. So those are simple problems. Here EBIT itself we found out and then we clear, okay? So starting point is this, we started. And this one, question number 7 is a tax impact and value of the firm calculation, okay? Value of the firm. Then this is a simple typical investment decision problem, okay? Where cash flows also we created and then we calculated NPV and IRR. And then this one, NPV and sensitivity analysis both are there, okay? NPV and sensitivity analysis both are there. Then we came into question number 10. Question number 10 is a full-fledged investment decision problem where all the adjustments are covered, okay? More than that, I don't think so any adjustments are there. Here all the adjustments are covered. Thank you very much.